Good morning, everybody. Welcome back to another episode of the Market Open. It is Friday, August 23rd, 8:50 a.m., and we are here today. Yes, I am 5 minutes late. I had to finish up an important phone call with someone early in the morning, but we are done, and we are here today with one of the most important things of 2024 on the docket. In about 1 hour, we've got JPOW who's ready to talk. I'm excited, dude. I mean, like, I was so excited. I made the YouTube link for this last night, right before I went to sleep. I was like, you know what? We're going to schedule the stream right before I go to sleep. We're going to get this all set up and ready to go. It feels just as important as CPI or PPI or GDP numbers. And obviously, because we get to see JPOW talk, it's likely going to be more important. Now, one thing about this, there's a lot to talk about today, a lot to go through. We had a lot of news after hours yesterday, a couple of different headlines around some very important companies like Uber and Tesla that we're going to go through. I don't think JPOW is doing a Q&A or a question and answer period. This is not like one of those FOMC meetings where he gets to say his speech and then he has to deal with questions when people ask him about what he says. So if this is not one of those speeches where he has to actually respond to how people think about him or what people question him on, and it's literally just him talking, well, that means it's going to be very simple. And he's going to give out a thesis. I think it's going to be like a 10 to 15 minute speech, maybe 20-minute max. Yeah, last month it was 15 minutes and 41 seconds. I'm looking at it right now, and there was no questions. And this is what it looked like, actually. This is
It's inflation over.
So if we get if we get the same thing right here, it looks like he's in like a Harry Potter dungeon or something like that. Like this setup itself looks hawkish. But if he gives us a little bit of dovishness, more than what we've got already, I think the market's going to have a 2 to 3% day. And why do I say that? Well, look at the pre-markets right now. Pre-markets are booming. Pre-markets are super, super, super excited. S&P 500 up 0.63%, almost taking away all of the losses that it had yesterday. There's a delta of about 15 bips that we still lost yesterday if this pre-market action continues, but not bad at all for the S&P 500. If we look at the Max 7, Meta is up 1%, Microsoft's up 70 bips, QQQ up basically 1%, 0.92, Tesla 1.15, SoFi 1.10, even Robinhood was going crazy last night in overnight markets. Right now it's at 2007. That's been doing good. Bitcoin basically at that 61,000 range. I think it's at 60,800. Oh wow, 61,147. There you go. Bitcoin right above 61,000. So I think Bitcoin as well is expecting a pretty dovish JPOW. And then Nvidia up 1.24%. Nvidia was down 3.7%. Now, why did the markets go down yesterday to the tune of about 1 to 2%? Some names about 4 to 5%. I think primarily it was rooted in the fear of what JPOW was going to say and the uncertainty if he would definitively confirm this 25 or 50 basis point cut. We know it's going to be 25. Some Fed members in the FOMC minutes wanted 25 in July. The labor market data has been relatively weak. It's not been horrible, but it's definitely been weak enough to justify a rate cut. All of that stuff makes sense. I personally think we need 50 bips ASAP, given how strongly we're seeing a decline in the labor market. It's not like recession level decline at 350,000 jobs, but it is 233,000 a week, which would imply there is some weakness there. So we know we're going to get September cut. The question is going to be how big is that cut? And if that cut is good enough, signaled by JPOW today, then I think we end up doing well. So we'll see. We'll see what happens. Let's do a poll in the chat. Do you guys think we're going to dump or pump today? And let's get your guys' perspective. Either this pre-market setup is made for us to dump. I'm not going to have high expectations because on FOMC last time, we rallied so hard and then we dumped. Dump or pump on JPOW's speech. So answer this poll thinking after 10 minutes, what do you think happens? Because the initial 10 minutes, we might pump to the moon and it might be great. And IWM might be at 228 like it was last time. And everyone's like, all right, this is great. And then in the last 10 minutes, we sell off pretty aggressively. Like it's not a sell off to the point where it's like a new bottom or anything like that in the market, but it is like an annoying sell off. So if I had to guess, I would say we pump. I don't know if we hold the pump. We're already pumping right now. If he says anything that's just a little hawkish to the point where he's insinuating we're not going to get a cut, and again, I just don't think he would do that. But if he says we're not going to get a unique cycle of cuts, or that the data is not strong enough to definitely imply a full-on cycle of rate cuts, then I think the market's going to be annoyed. Because with 560 on the S&P, they're pricing in at least, you would argue 3 cuts by the end of the year, which I hope is going to happen. But we will find out today, and we will see how it plays out. Benny, Derek, Martin, Mark, Walt, Dougie Fresh, June, Chris, Bay Ray, Not Branded, John, I'm Beneficial, Samir, what's up, what's up? Thank you, everybody, for being here today. Some of you say pump and hold. If we dump, I'm taking a Xanax. Broccoli Bob, what's up? Benny says we'll dump, but the dip will get bought towards the end of the day, and we'll end out flat. So we had money market fund data yesterday, and this again signals to the argument, hey, are we really dumping on this news, or are we pumping? Because the market via money market funds is showing us that they want to dump, and they are very scared to be in equities. 24 billion was added last week, 6.24 trillion. This is 115 billion added in the past 3 weeks to these money market fund assets. It's at the highest level in history that it's ever been. And at least money market funds are telling us that they expect to dump. Either money market funds are waiting for a rate cut to get their money back into the market, or they're waiting for a crash, right? It's one or the other. You either wait for a crash and then you start putting money in, or you wait for your risk-free rate of return to be not juicy enough to not take any risk, and you come back into the markets. This is what I mean. Whenever I've been saying this is like a historic level of money market funds, if you look at 2010 to 2019, it was hovering just under 3 trillion. 2008 was an anomaly because we had a recession, and so that money started leaving. This is why when everyone says, "Oh, money's not going to leave to go to the market when we have a downturn into an upturn." Well, this is your downturn into an upturn. 2008 it reached a peak, and then boom, it decreased when we went into 2010s and 2009's 27% recovery on the S&P. Now the thing is, 2024 is not a downturn in the stock market, even though every single economist besides like Tom Lee and Dan Ives thinks that it should have been a downturn. Again, most people were bearish on 2024. So now that money's going to have to leave an upturn, which is weird because they're getting 5.5%, but we still have a bull market, and go into another bull rally. I think a lot of that money is afraid, though, because they feel if they leave the money market funds, they're going to go into a bear market, and that's why they're staying there until they see a pretty big crash. But nonetheless, this is absolutely unusual performance for money market funds. It's not supposed to be this high, and that's obviously because the Fed's funds rate is just way too high. So we'll see today. We will see today on how this ends up playing out. But JPOW will be talking at 10 a.m. I think TJ will be on with me at 11 or 10:30. No, probably 10:30. I already texted him, so he'll be on. We'll do our option segment a little after the JPOW speech, but JPOW speech is going to be interesting, dude. It's because if he says the right things, the market could really rally and they could just not care. Snowflake, by the way, up 1.4%. Rocket Lab up 3.36%. We'll talk about Rocket Lab in a second. They had some news after hours. But if JPOW just gives us what we want to hear, we will have a good day. Amit, what is your prediction? I think we pump on this dude. Maybe I'm too bullish, but I think he's going to say fun stuff and he's going to whisper sweet nothings into our ears. And the market's going to like it. I think that's how it plays out. Palantir, by the way, as well, up 0.69%. Let's get into Palantir. So we'll get back into the macro in a bit, but I think it'll be good. Most likely, I think we pump and then we dump right after. I think we hold the pump because the market is ready for JPOW to give us some more momentum. I think the dump we got yesterday, I saw a lot of bears take a victory lap on the dump we took yesterday. I'm like, are you like, what is going on with you? Like, are you that desperate? Like, I'm not saying we can't dump again today. It's Friday. We tend to dump, but in general on a Friday, but like people were really happy. We got like 0.95% down on the S&P after going up almost 8% in the past 2 weeks. And it was just like, we're stretching here now. Like we're really stretching for a bear argument. If JPOW says something that's actually bearish, then yeah, we'll analyze the bear case. But we all know he's going to be bullish. The question is, how bullish is he for the market to interpret it and then easily decide that they can, continue giving the market momentum. 10 a.m. he's talking. And so we'll see what he has to say. And then we have NVIDIA next week. Exactly. This is going to be a crazy week next week, dude. It's going to be an absolutely crazy week. I think NVIDIA is going to crush it, but the market just needs to interpret that crush in order to keep things going further. Okay, so Palantir, just before I went live, folks, we got a new partnership. Got a new partnership for Palantir. So Sampo has signed a 3-year partnership with Palantir. The initiative plans to invest over the next 3 years in digital and in data integration and AI solutions to drive digital transformation at the insurer, which is among the top 5 in the corporate and agribusiness insurance segment in Brazil. So I'm pretty sure most people that know Palantir know about Sampo. Sampo is a holding company in Japan that has worked with Palantir since 2019. It's one of our largest Japanese clients, and they have parts of their insurance business segmented across the entire world. I think we already had a multi-year partnership, so this seems like a reaffirmation of that partnership to extend and expand the scope of work with Palantir. Also from the press release, Sampo's investment in Palantir Solutions reflects the company's determination to enhance its program of digital transformation, incorporating solutions to optimize business performance. A couple of quotes from the PR that I thought were really good in a variety of locations. So we have Sampo's superintendent of strata and data governance. They said, "We are excited about our partnership with Palantir using Foundry and AIP to maximize the potential of our data. These advanced data integration and analysis tools allow us to implement AI models at scale. With this, we can turn data into strategic insights and significantly improve decision-making across the organization." Then you got the VP of Latin America, Palantir says, and we haven't heard of the VP of Latin America from Palantir in a long time, so this is a nice international partnership given Sampo's company extends the insurance business all the way to Brazil. This important agreement with Sampo is Palantir's first partnership in the Brazilian insurance sector and reflects our consistent investment and growing local presence in the country. Our AI operating system now powers many of Brazil's most important organizations, from government, public health, and education agencies to companies in the retail and tourism sector. The only other Brazil partnership that I know of is Rio Tinto, and we haven't talked about them in a long time, but Palantir had some massive digital transformation for them back in 2021. And so that's the other sort of major partnership we have in Rio Tinto. One more quote from the chief strategy at Sampo, Rodrigo Carames. He says, "Historically, the search for efficiency involved automating simple, repetitive, and high-volume processes. This still applies, but with a new technological frontier applied to the use of data and AI and the availability of simpler tools with natural language, aka LLMs, we can expand the search for efficiency to the organization's highly specialized core processes. The challenge now is to ensure that the team is involved and prepared for the new moment." This is the type of quote and PR you want from a company that's working with Palantir, because they're essentially saying, hey, we are ready to move on and digitally transform and engage in this process of becoming a modern AI company or a modern company that uses AI to streamline operational efficiencies. But now the biggest challenge is not implementing the technology, but getting our team members who have historically not used this technology to get on board. And that's a hard thing to do. And I like seeing that from a company when they're partnering with Palantir, because basically they're saying, hey, Palantir's tech is so good and we believe so much in this vision, and we're partnering with each other. They're not just going to be clients with us, that we want to work with them, and we want to get our team members that probably don't want to learn a new way to interact with data and technology. We're willing to invest in training them because we believe that over the next 5-10 years, this is going to have a massive implication for the broader company. Sampo is also an original investor in Palantir, correct? Sampo is also an original. I think they invested like 500 million, or their stake was worth 500 million. They've trimmed since then. But let me see. How many shares does Sampo Holdings have in Palantir? I think it's still a couple million shares they own in the company. But they invested in 2018. So I don't know exactly how many shares they have left. I'll try to find that data. But yes, they haven't been an original leader in Palantir in terms of believing in their technology. Karp and Thiel, they went to Japan a while ago and took pictures with the CEO and chairman. So good deal. Makes sense. Extending the partnership 3 more years. And this should really help with our net dollar retention. It seems like the customers, Tampa General, Sampo, et cetera, that have extended their partnership a couple weeks ago, those companies that got value out of Palantir, it seems like they're continuing to get value and they want to extend that value. And that value hopefully leads to more and more momentum for the top line commercial business for Palantir. So not bad. That is your first partnership on the day for Palantir. JPOW speaking at 10 a.m. for those that are curious. 10 a.m. We'll stream it live. It'll only be 15 minutes. It's not going to be super, super long. Yeah, this is a subsidiary today. Yeah, this is a subsidiary. But it'll be 15 minutes, and in those 15 minutes, we will see if the market goes green or red and see how this ends up playing out. I'm excited, folks. I'm excited. I am so excited. I just hope he doesn't say anything that's super bearish, which I don't think he will. I think he's going to say green, like good stuff. I was about to say, I think he's going to say green stuff. Basically, if he says dovish stuff, that'll be green. So We'll see what JPOW says. Let's hear from Mr. Dan Ives on what he thinks about NVIDIA. That is coming up on 8/20. And that is going to be the next big event after JPOW starting next week.
A lot riding on this report. You have a new note out. Let's just start with this. I'm just looking at the estimates. These are the estimates. Revenue growth of 112%, EPS growth of 125%. Just astronomical. It's like you're shaking your head, and you're one of the biggest fans of this company. Can this company meet these expectations? Can it even exceed them? Is just meeting them good enough for investors?
Well, meeting is not good enough, but I believe this is going to be a drop the mic moment for the godfather of AI, Jensen NVIDIA, because all of our checks are showing this is accelerating. And I think the street, like you said, every quarter, prove it. This revolution is just starting, but it all starts with NVIDIA. In my opinion, it is the most important earnings, not just of the year, potentially in many years, because of what this represents in terms of tech.
So I've been asking a lot of people this. Is it the earnings that matter or the guidance? Because the expectations are lofty. Let's say they meet or beat when it comes to revenue and EPS, but the guidance isn't what people are expecting. What does that do to the stock? What do you think it does to the market?
It's all about the guidance. But we just got back from Asia. All of our checks are showing Street is still underestimating this acceleration. Because right now, the only game in town is Jensen. And really, if you look what NVIDIA is doing, especially from chips coming forward, this enterprise demand is just starting. And in my opinion, of course, Powell, Jackson Hole is so important.
Huge, obviously.
But the market, what it's going to do for the rest of the year, and I could argue even into 2025, it starts with this NVIDIA earnings. And I expect, get the popcorn ready. It's going to be
you say this every quarter, Dan.
No, but this is going to be a showstopper showing where the revolution's going.
Okay.
And I think the skeptics continue to get proven wrong.
What about the questions? The air pocket between different iterations of their chips, some of their customers making their own chips, and the fact that the AI enthusiasm seems to be dying down. You're not concerned about any of that?
Yeah, so it's hit on them. For a delayed 2 to 3 months, I view that as sort of an asterisk. In other words, this is not moving the needle in terms of from a demand perspective. When you talk about AI in terms of some of the hype, look what we saw from the hyperscalers. Amazon, Google, Microsoft, what Nadella talked about, what Lisa Su and AMD, the Messi of AI, Palantir in terms of the use cases. It's showing that now the second, third, fourth derivatives are just starting to play out. So when I look at what the godfather of AI, Jensen and NVIDIA are doing, we're talking about transformation. I believe a year from now, this is a $4 trillion market cap along with Apple and Microsoft.
By the way, you changing his last name. It's Jensen NVIDIA. It's not Jensen Huang anymore. You just decided?
Look, you're
making decisions. I want to get back to your note. According to your research, for every dollar spent on NVIDIA chips, it kind of flows through to the rest of the tech sector to $8 to $10. What does that mean for some of these other stocks?
That's the most important thing. Because remember, it's not just about NVIDIA. It's about the multiplier. It's about the revolution, the $1 trillion of CapEx. For every dollar spent on an NVIDIA chip, there's an 8 to 10 multiplier across the rest of tech. That's why it's so important in terms of what NVIDIA says for this bull market to continue.
So you're saying it's a broad tailwind. It's not just it's a rising tide that's going to lift all boats.
Because it's not just
even in software, because software seems to be under pressure, or at least it was when it comes to this AI craze. And it seems like a lot of the money that was going to software has gone to chips.
But even next week, you'll hear from Benioff and Salesforce. What are they focused on? AI. Look at McDermott and ServiceNow. In other words, it's just starting now. The software wave is a second, third derivative. That's why I think we're sitting here a year from now, NASDAQ 20,000, and it continues because now the rest of this party, it is only 9 p.m. in the AI party
that goes to
that
when?
we believe it goes to 4 a.m.
To 4? Not to sunrise, but it stops at
4 a.m. And look, will there be times music stops and there's glass in the food? Yeah. But right now, what we hear next week, it shows this party, the music continues to play on.
All right, I know.
So again, same old, same old. I think at this point, listening to Dan Ives is just confirmation bias. It's just like, all right, like just say the same thing and like keep saying the same thing about this NVIDIA revolution. Even though I think he's going to be right. I think he's going to be right. He is correct that the guidance is going to be the core thing that matters. The street wants 28 billion, if I'm not wrong, in revenue. By the way, I couldn't find exactly how many shares Sampo has of Palantir still. For those that are just joining, they signed a new 3-year deal, but they did sell some of their stake in December 2023. So it looks like they still have a decent amount, but they were trimming in December of 2023. But the street is expecting from Nvidia next week on the 28th, 28.5 billion and 64 cents of EPS. If they bring in 30 and do maybe 80 cents of EPS or $1 of EPS, which would be a pretty big beat, and they guide for 32, then I just don't know how the stock doesn't go up, dude. Like, I just like, and if it doesn't go up, it's one of the cheapest tech names, at least going into 2025. So you would imagine no matter what it is, whether it's 130, 120, whether it's 145, like you would see some momentum if they beat those top line numbers of 28 billion and 64 cents, because those numbers are already so insane to beat. Like Palantir right here, 32.22 in the pre-markets. So I think NVIDIA is going to do okay. NVIDIA fell, 3% yesterday. Yeah, it was up 44% over the past 10, 11 trading sessions. It makes sense to follow, but that's what I felt about the volatility yesterday. Like when I saw it happen, I was just like, okay, so yeah, like we were up a lot the past couple of weeks. It's not just going to go straight up, which it basically did over the past 2 weeks. You're going to have a little bit of turmoil. And yesterday, I don't know if down 1% is turmoil. And again, I was expecting down 2 to 3% on the day the jobs revision came out. So we didn't get anything like that. A day later, we got a little bit of downside momentum, but it wasn't enough to create some, magnificent buy the dip opportunity. Like it really wasn't a dip yesterday. It was, I mean, if you actually cared about buying some more shares of company, sure, like Palantir, even $30 would be a better dip than what we've seen. At 31.94 was not a dip yesterday on Palantir. So really 27 is the dip I think most people want, but if they were to buy a dip. So I don't really think we're getting any dips. 31.94 is not really a dip. Snowflake is the only one that dipped hard, but even Snowflake right now in the pre-markets recovering a little bit. It was down 14% yesterday. Now it's up 1.29%. I'm curious to see if the pain on Snowflake is going to continue or if it's going to kind of stall out, and we'll see how that plays out. TJ and I have, I think, 118 puts on Snowflake on this one that are expire on 8/30. So that was kind of like a YOLO play going into earnings. We'll see if those get assigned or if those get taken away. But down 14%, you would imagine the pain stops. Now, one thing is on the technical level of Snowflake, if because it is not holding 120, I think it can fall below 100. And then below 100, it kind of does get a little attractive at that point, just as a swing trade, if it's at like 75 or 80. We did a Twitter Spaces yesterday, and we were talking with some people in the data industry on Twitter, and they said they don't like Snowflake, but if it gets to 75, like they're taking a multi-$100,000 position, because at that point, a company's doing $4 billion in revenue. It's starting to become relatively cheap, or like really cheap. But I don't know if the market's going to give us that now. Now that it's down 14%. Snowflake's down almost 50% for the year. So for Snowflake to fall, for Palantir to fall, for Rocket Lab, for Robinhood, for NVIDIA to fall another 4 or 5% today after the pain they had yesterday, and some of those names being exaggerated in terms of their pain, I think we would need a very hawkish JPOW. And I just don't think we're going to get the hawkish of the hawkish JPOWs today. I think we're going to get a relatively bullish JPOW. Is that photo of JPOW on the stream from his Instagram account? I don't know where they got this photo, but this is JPOW at Jackson Hole. I just wish we got to see JPOW in like the mountains actually like give a speech like this, because that's what the thumbnail of the stream is, in the mountains. But he's giving the stream from like a literal dungeon, bro. He's giving the stream from a dungeon, and it's like it's not the friendliest of places, but we'll see. We'll see what JPOW has to say. It is going to be very, very interesting. And at 10 a.m., this is how we're going to know if JPOW is going to screw us or if he's not. I don't think he's going to screw us. I think it'll be okay. But if he does screw us, then it'll be hopefully a better day to buy some of the dip. Shut the effing door. Yeah, imagine he says that. Everything green today, but pre-market except the VIX. Well, that's good. VIX is down. VIX futures were up a little bit. So VIX is down about 4% on the day. And this is the thing about we got a red day yesterday. If we have a continuous red day today, I'll say, okay, we're in a little bit of a downtrend. But every time we've had a red day this whole year, forget about August 5th to like August 8th, we recovered and went green pretty quickly. I mean, the April, we had a little bit red because of Israel, Iran. And then August 5th, and then there was one day, I think in at the end of April or early May, where NVIDIA fell 10%. Do you guys remember? It went from like 900 to 75. That's when I bought the $1 of NVIDIA that I'm up like 60% on or something. But that was another 10% decline, but that was really just to NVIDIA. And then that recovered. And then you had NVIDIA earnings. They crushed it. And then the last time we got a real decline was August 5th. And that was one of the best buying opportunities ever, at least in this market. So I don't know if today it gets as bad as people think, but it really depends on what JPOW is going to say. 10 a.m. 10 a.m. is when he speaks. And we'll see what he has to say. So let's talk about Uber. We had some mood news with Uber last night, which was very interesting. And Deutsche Bank actually set a buy target on Uber because of this news, but the stock is down, or it was down about 4% last night. Uber and GM-owned Cruise announced a multi-year partnership whereby Uber will start offering the option to select self-driving cruise vehicles as a part of their autonomous vehicle fleet on the Uber platform. Now, I think this is a move that needed to be done by Uber because they are scared shitless of Tesla. And the reason they're scared of Tesla is because they know that even if Tesla's Cybercab and Robotaxi is not legitimately going to put them out of business in the next couple of years, the perception by Wall Street will be, why would anyone call an Uber when you could have the privacy and safety and sort of like your own world within calling a Cybercab? And it's just going to be a way better experience, right? The car theoretically should be safer if the AI is that good. The privacy that you have inside of the car and the fact that you can pick your own music and your own temperature and you can get in, you don't have to talk to someone telling you about their life story. like it's just a way better experience theoretically. So why would you pick an Uber? And I think Uber knows that it's not a question of FSD destroying their business. They're not going to turn them up overnight. But the problem is the perception by Wall Street is going to be, if we're looking for future growth, where do we see Uber's future growth really coming from? So I think this is a defensive move. I don't think they care that much about Cruise. I don't think they even believe that much in Cruise. Even GM, the parent company of Cruise, doesn't believe that much in Cruise. I think a partner with Waymo would have been way more exciting for Uber because Waymo does 100,000 trips weekly that are paid. And we found that out this week. That's growing about 50% quarter over quarter, which is incredible. But they partnered with Cruise. And like, I think this will help Uber to a respect and to an extent, but I don't know if that's going to be enough to combat the fears that they have coming from Tesla. Look at it in the pre-market. Everything's green. Uber was down yesterday and it's down 1.15% today. Like, you would think a piece of news like this would get the market to be excited, but for some reason the market's not buying it yet. They just don't, think it's a good thing. And the interesting thing here is about the drivers. I mean, how do the drivers feel knowing that their jobs are basically starting to get taken away if these autonomous vehicles take up a majority of the fleet? Now, look, I think we're still far away from that. And I think you need something like Tesla's FSD to actually make it like real robo-taxis. Like, I don't think GM's and Cruise's technology is really that strong to be able to enable that to scale. But I think the market doesn't buy in that this Uber partnership is going to be that effective. And it seems like they care more about what Tesla's going to do. Now, I think what's also going to be important is when Tesla on 10/10 announces their product, does that expand the broader market for everybody? Because that's something that I don't think we've thought about. We've always thought about the bearish case for like Uber and some of these other companies when Tesla unveils the Cybercab. What if they show that the market is so big that every time Uber does something interesting in the autonomous space, the market says, hey, this is a very big market. This is the realest use case of AI that anyone can actually think of a self-driving car. Therefore, if Uber even kind of competes in this world and they get some market share, we're bullish on it. Maybe it actually expands the pie and it makes the market more excited. More likely than not, I think it's more competitive and the dynamics are going to be competitive. But that 10/10 event is going to determine probably how the market considers Uber, Google, who that owns Waymo, and Tesla to compete in this race. And so we'll see. We'll see how that one plays out. JPOW to announce retirement today. Could you imagine, dude? Could you imagine he walks up and he's like, hey, we're cutting 100 bips and I'm retiring? That would be the coolest way to retire, bro. That would be the dopest way to retire. The country should be happy I'm not the Fed chair. Because if I was the Fed chair, dude, I would take those meetings. And I would take those meetings as an opportunity to have fun. These public FOMC meetings, like, I'm not holding back, dude. I would the amount of jokes I would come up with, dude, I would oh my God. I would be like, my fellow Americans. So I hear today you guys are interested in my thoughts on interest rates. Okay, that wasn't a good joke, but it's like kind of play on words, right? Interest rates, interest. There wasn't really a punchline there, but you get my point. Like, I would try I would try to just like find a way to make these things fun. I would really try to find a way to make these things. I would definitely say, hey, in the needle stack. I would definitely say we have to be on the edge of our seats. Like, dude, if I say we are out on the edge of our seats for some weird way during the FOMC meeting, someone's gonna shoot me, dude. The country's not gonna allow me. They're not gonna let me be the fucking president. But it would be fun if I was chair of the Fed. It would be really fun. All right, let's hear from CAVA CEO. They had an amazing quarter. They crushed it. Stock is up 7% and it's up 150% for the year. Let's see what the CAVA CEO had to say and why they crushed it. It's one of the leading restaurant brands this year that ended up doing really well with their stock.
Moving sharply higher this morning. The company raised its full-year outlook after the second quarter results. Beat analyst estimates. The stock now up more than 400% since its IPO in June of 2023. Remember it well. Joining us now is in a first on CNBC interview is CAVA co-founder and CEO Brett Schulman. We're getting all the background.
It's fascinating.
It is, because I can't believe it's been 5 quarters already that you've been able to report since CAVA, and I can't believe the stock performance. Although, as I said, I've eaten there, and I do believe the stock performance. I really liked it. I've only been there once, but the 5th quarter, you said you would characterize it as maybe the best quarter you've had.
Yeah, the 9.5% traffic growth is just a great performance and a testament to the appeal of our Mediterranean cuisine. And I want to give a shout out to our 10,000 team members across the country who deliver on our mission to bring heart, health, and humanity every day. And I think our results are a reflection of that. You were one of the co-founders in the original CAVA. We just found out it's still around. It's CAVA Meze, did you say, in Rockville, Maryland, and they pioneered. That's where you got the idea, I think. Yeah, so all my co-founders are sons of Greek immigrants, and the brand's origins go back to 2006 when they opened a single full-service restaurant, still there today in Rockville, Maryland, and then started selling the dips and spreads. Think our crazy feta, our harissa, and a couple local Whole Foods. I was introduced to my co-founders from a friend from college who cousin is one of my co-founders, and they asked me to join up, be their 4th partner, and we took elements of both of those businesses, the full-service restaurant and our grocery products, and put it in a fast, health-based format to really unleash the power of this food to the world. Can we talk just about how you're pricing things? If we've got price gouging legislation around. Have you raised prices more than your costs have increased? I think that's been one of the things that has really helped us drive our success and drive our traffic. If you think about from the end of 19 to the end of 23, we only raised prices about 12% during that time period. CPI went up about 18%. The Department of Labor has noted that fast food has raised prices upwards of 30%. So it's really enhanced our relative value proposition and able to deliver a really compelling value to our guests, which obviously, it's clearly resonating. And even recently in California with the legislation AB 1228, I think we were the only limited service brand that did not take incremental price as a result of some of the legislated wage increases.
Are you taking losses, though, or taking margin hits? Because you're growing so fast, you can deal with it down the road. You can maybe even take some share from other players because profitability is not the main focus right now?
Well, that's the power of our economic model. Our 2-year same restaurant sales growth is over 30% this quarter. And that's allowed us to not only invest in our team members, so we've invested in wages 9% year over year, mitigate cost increases to our guests, and expand restaurant level margin at the same time. I don't know. That was the question I had. I don't know how you.
So CAVA absolutely crushed earnings, and they also spoke on the unit economics of their store. I mean, dude, they grew revenue 32%, like a tech company. That's kind of insane, bro. CAVA, Texas Roadhouse, Chipotle, Shake Shack, and Wingstop, they have had the best year in restaurants or in the restaurant category. Papa John's, Domino's, the Starbucks, they haven't had the best year, but the other ones I mentioned if you were selective with your restaurant picks, they did pretty well. CAVA up 9% in the pre-market, now up more than 160% year to date. Just an incredible business, incredible unit economics, not blaming the consumer, giving sort of like Red Robin was down 15% yesterday. Like, it's not about the consumer at this point. Like, the CAVA and Red Robin relatively cost the same. People just like CAVA more than Red Robin. So that diversity in terms of how the consumer is picking their food, it's leading to different restaurants having momentum, and CAVA seems to be the beneficiary of that business model. And if you've been in the stock, you've done very well this entire year. And they opened 18. I think they have 300 in the country. They opened 18 this quarter. So the expansion, along with their gross margins on a restaurant business, which is not easy to get a margin out of, I think it's like 26.5%. That's just showing incredible growth as well for the company. Speaking of food, dude, I had a dream last night, and I don't even remember a lot of parts of the dream, but the last thing I dreamed of before I woke up, and I really want this now, and I'm sure some of you guys are going to want this after I say this. Let me know, like, tweet at me with the picture of this if you eat this. But I want waffles, bro. I had a dream that I got waffles. I was in like a line at a cafeteria, like in school. You remember I used to be in the cafeteria line before, like during lunchtime during school? And the lunch lady gave me these like gourmet waffles. It wasn't like school waffles. Like, I don't know what type of food you guys had during school, but during my high school, we had like garbage food, bro. Like it was bad. There were many days I just did not eat. I was like, you know what? We're just not eating this food. This is ridiculous. But yeah, the food usually sucked. But in that dream, I had gourmet waffles for lunch. And they had chocolate chips on them and syrup. And I'm like, oh my God, Broccoli just said waffles covered in mayo. Please just don't do that. Stop, yo. Mayo waffles are so good. You guys are ridiculous, bro. Chicken and waffles. The best waffles I've ever had in my life, I think, are at Roscoe's Chicken and Waffles. If anyone is in LA, that's a restaurant in Los Angeles. That is my favorite chicken and waffle place ever. Waffle House in Atlanta. I've been to, the Waffle House in the South. Those are good too. But Roscoe's Chicken and Waffles, I think those are some of the best waffles ever. I'm more of a waffle guy than a pancake guy. Amid who dreams of this stuff? You know who dreams of this stuff? Someone who is like trying to eat healthy and is not eating bad food anymore. That's who dreams of this stuff. Dude, like now that I'm on my health kick, like in order to like satisfy my cravings, I like watch other people eat, like I'll go on YouTube and watch someone demolish some like Chick-fil-A, acting as if I'm subliminally living through them and I'm eating the Chick-fil-A, robbing it at 2006 in the pre-markets. Because that's how I get over the craving, bro. It's like that's the only way, dude. Like if I want a mean steak, I'll just like, there's a lot of ASMR channels that like people just eating food, mukbang channels, all that stuff, It's what you got to do. It's what you got to do. But now I really want some waffles, bro. That dream, I was like, oh my God. Like I woke up and I was like, I need some waffles. Rocket Lab, we got 3 minutes until the market opens. Rocket Lab did something really smart yesterday. So they're up 3.5%. They tapped the Lockheed Martin CFO and they put him on the board of directors. I love that move, dude. I love that move. Why do I love that move? Because at the end of the day, they're doing exactly what Palantir did with Mike Gallagher. They're trying to get someone on the inside. Look at Rocket Lab. It was at 412 on August 5th. Now it's at 702. They're trying to get someone on the inside who understands Congress, who understands lobbying. Lockheed Martin CFO obviously closed major deals with the government, with the DoD, and they're trying to get them to help Rocket Lab get some of those deals. Rocket Lab trying to expand in the defense category. I think that's a big deal. Peter Beck basically thinking, hey, this is our moment. We're having, a run in the stock. We should probably continue compounding the good news. And that documentary that came out on HBO, they're getting more marketing now and brand awareness. I think he's just like taking advantage of the moment and he's trying to compound on it. And I think that CFO on their board of directors is going to be an absolute rock star for them to be able to get more deals. Market cap is $3 billion. Again, is it like super overvalued? I would say no. Is it super undervalued? If you have a 5-year time horizon, yeah, I think $3 billion is pretty undervalued. In the short term, could it, go back to 5 and 6 just because the price of sales is a little bit up there at 14? Like, yeah, that could definitely happen. But I think if SpaceX sets the TAM for, at least $1 trillion of opportunities, Rocket Lab at $3 billion, and ASTS, which by the way is worth $10 billion, and they're doing a revenue of $1 million, I found out yesterday. Like, I mean, if people are literally just betting on potential on ASTS, given the revenue is $1 million, market cap is $9 billion, I don't know how you can, necessarily say Rocket Lab is not worth taking a bet on if you're bullish on space in general. So that was really good news for Rocket Lab, and it deserves to be up, and hopefully it can continue holding this $7 range as well over the next couple weeks. It was the former CFO. Sorry, he was the former CFO. So he's not the current CFO. He was the former CFO at Lockheed Martin, now joining the BOD of Rocket Lab. All right, folks, here we go. We got 15 seconds. Let's see how the market opens. In 30 minutes, we've got JPOW speaking, and then we'll see what he says and if he can make stocks continue to go higher. Friday, August 23rd. Thank you, everybody, for being here today. 9:30 a.m. The stock market is now open. Wake your ass up. Here we go. All right. I am curious about the SPY. I am curious how red do we get? Do we go green? How does this thing end up playing out? I am very curious right here. Does this green 0.5% on the SPY go red? Because if it doesn't go red, and JPOW gives us the goods, maybe it only continues to go green. Snowflake up about 0.5%, 116 right there after being down 14% yesterday. Robinhood opens at $20, up about 0.7%. Rocket Lab 689, up 0.5%. Palantir 32.15. For those that are just joining, we did get a new Palantir partnership today for 3 years with Sampo. I posted about it on Twitter, but if you rewind to the first 5 minutes of the show, you'll hear me talk about it as well. NVIDIA at 125, up 1.45%. Faraday Future again up 30% after being up 121% yesterday. They did a reverse split, so obviously there's some meme stock action going on with this one, but that is up. Grinder up about 16 bips at 12.29. Starbucks up 1%, 93.25. Tesla 214, up 2% after Tesla fell 6% yesterday. So again, Tesla fell 6%. Snowflake fell 14%. I think some of those names that had pretty bad declines yesterday, they're going to not necessarily recover today, but the bleeding hopefully has stopped, at least for today, unless JPOW says something that's worse. SoFi 722, that opens up about 0.48% up. Microsoft 416, Meta 535. Meta was at all-time highs yesterday. The NASDAQ is up almost 1%. S&P got a red candle there. So you got the S&P not going red, but you do have a red candle. So we'll see where that stops and where the buyers come in. Bitcoin at 61,000. I don't think there's any headlines on Bitcoin. Just the momentum that JPOW will cut rates is getting people excited about Bitcoin. And if JPOW is again more dovish, that's good for Bitcoin. Uber again partnered with Cruise yesterday. Market doesn't like it. Market really doesn't like it. Down 1%. I'm shocked. The market is not giving them any benefit of the doubt on that deal. Maybe the market feels they're moving backwards on autonomous. Like, I don't know how you explain that. Like, the news is only good news. It's not bad that they're partnering with Cruise unless you interpret it as bad. So I'm really surprised the market's selling off Uber on this one. But Uber's down. McDonald's 290, TSM 168, Google 164, Coinbase 200. Coinbase has had a rough couple of weeks. I mean, because Bitcoin, like the whole market's rallied, but Coinbase, because it's a crypto name, like all that matters is trading volumes, and Bitcoin trading volumes have been horrendous. I think Robinhood's trading volumes on Bitcoin might be lower than what they were last month. Last month, they were 5 billion. Probably coming in at 4.4, 4.5 billion in August. Options and equities will compensate for that, but I don't think anyone's like, the volume itself is so low, and it feels like algos are controlling Bitcoin right now. And that's definitely not the best for Coinbase. Palo Alto 352, that's up 1%. Netflix 692. Where is CrowdStrike? CrowdStrike also has earnings next Wednesday, along with NVIDIA. CrowdStrike 268. CrowdStrike as well, up 0.5% on the day. Robinhood still holding 20. Rocket Lab is 685. Palantir 32.13. And then NVIDIA at 125 on the day. Maybe they realize that Tesla's ahead. Yeah, maybe. I mean, maybe that's the thing. Maybe they're realizing Tesla's ahead and they're not willing to give it any kind of core momentum here. Where's IWM? We haven't looked at IWM in a minute. We got 20 minutes, folks, until JPOW speaks. And we'll see what he ends up saying. 215 on the Russell. What are the results of the poll? Let me check the poll. What did you guys say? So I said, do you think we pump or dump on this news? The poll, I think you can still vote in the chat. But it looks like 65 say pump. Okay. So we have 1,400 votes. 65 say pump. 35 say dump. I'm going with the majority then, bro. This is a democracy. I'm going with I'm saying pump. I think we pump. VIX is down 4%. That's a good news. So VIX being down 4% is also good. That's also very, very good. And that should help. All right. Robinhood getting a little pump right now. 2010. S&P bottomed or trying to form a little bit of a bottom right there. It was up 0.5. Now it's up 0.52. ASTS up another 3%. Palantir 32.11. Let me check the resistance on Palantir if 33 is possible again. We did touch 33 yesterday, which was very, very exciting. Yeah, 33 is possible. There's no resistance. We need JPOW to be really nice today, And there's zero resistance. There's absolutely zero. It just needs volume. Volume is at 2 million shares, which is good, but yesterday volume was at like 6 million by now. We need JPOW to say good stuff. And if that's the case, we have a chance at least at 33. There's no major walls stopping it. I want to change my answer to dump. Well, technically, yeah, you're supposed to go against consensus, right? That's what happens in the market. But I don't know, dude. I agree. He will have to be nice. He has no choice. I 100% agree on that. He has to be nice. He knows that it's hard to be mean around a lot of these issues. And so the market's not going to like it if he's hawkish, and the labor market definitely is not going to like it. And so I think we'll get him to be dovish. Now, we have 2 single stock ETFs that launched this morning. Let me see if they're live. Yeah, they're live. SMCX is a 2x long SMCI ETF, which is hilarious. So if you're bullish SMCI, you can go 2x long. And then AVGX is a 2x long Broadcom ETF. So if you're bullish Broadcom, I think they have earnings coming up soon. You can go long Broadcom, which is incredible. So that's up 2.55% of the day. So AVGX and SMCX, those are now leveraged ETFs. Earnings that we had yesterday, Intuit is down 5%. They had a relatively decent earnings, not anything amazing. They're down 5%. Bill is down 6.4%. Their earnings, again, were okay, not amazing. All of these companies beat on the top and bottom. The guidance just wasn't that amazing. Workday was down 5% yesterday. Today, it's up 13%. This one makes sense. They grew revenue at 17%. They bought back a ton of shares. Their guidance was good. I was surprised they were down 5% yesterday. They are actually up today, so that's good. Workday's up 13%. That's another SaaS name. And then CAVA is up 12% on the day. CAVA also had earnings. They had good earnings. Red Robin down 5%. They had earnings, not the best. Ross Stores did say the consumer was weakening for Q3 and Q4 guidance. They sell dresses and home decor and stuff like that, but they are up 5% on the day because they beat on the top and the bottom line as well. So earnings from yesterday, same trend. Most S&P 500 companies beating expectations. Apple is green, Microsoft's green, Meta's green, Google's green, Amazon's green, Nvidia's green, Tesla is green. Nvidia's up 2%, Tesla's up 3%. The Mag 7 is happy. The Mag 7 is absolutely happy. They are green. It is literally up to JPOW to keep us green. That's it. It is up to JPOW to keep us green. If JPOW keeps us green, we are going to win. If JPOW does not keep us green, then I guess we get a little bit of a Friday sell-off. Yep, S&P is going green. There you go. S&P now at 0.6%. Looked like we bottomed at 559. Now we're at 559.46. At least the intra-day bottom as per the first 7 minutes. Now you got a nice green candle forming right there. Let's see if we can build on that. Let's see if we can build on that before JPOW speaks. IWM is at 216. You got a green candle right there. Robinhood, there we go. 2019 up 1.5. Robinhood getting bullish for this JPOW meeting. Palantir 32.19. And then Nvidia right here, 126. Rocket Lab reclaiming that $7 range again at $6.99. Where's Snowflake? If Snowflake's pumping, we're definitely in a bullish market before JPOW speaks. Wow, Snowflake went red. Dude, that's bad for Snowflake. That's not bad for. If Snowflake can't pump on a day where everything's green, like I'm struggling to find any red, that's not good for Snowflake. That is horrible for Snowflake, dude. That is like disgusting price action that Snowflake can't maintain even 115 on one of the greenest opens we've seen in the past couple weeks, because everything's getting ready for JPOW, and that's bad. That's definitely bad. So that either reverses when JPOW speaks, or that just like shit hits the fan. This is probably an institutional investor selling right now. I would guess that's what's happening for it to be down 1% after being down 15% yesterday. HIMS at 1676, PayPal at 71. PayPal is also red, but that's basically flat on the day. Elf Beauty, that's down a little bit. And then the rest of the Mag 7, that is up on the day. IWM again at 216, up 1% right now. Why is Micron red? Well, it seems like, I actually don't know. Semis should be green. Wow, Micron's the only one that's red. Did Micron get down? Look at the left-hand side of my screen. Everything's green except Micron. Huh. You know, at the end of the day, Micron, I know a lot of people, it is commoditized memory storage. It's just growing at 86%, and that's why the street got excited about it. But you got to ask yourself, do you really think commoditized memory storage on GPUs is like really that exciting? And I personally don't know enough about it, but I guess the street just doesn't think it's that excited. They don't think it's that differentiated from some of the other memory storage names, even though I do think they have a bit of a moat. But yeah, that's down 2%. Interesting. Everything else is green. Broadcom's green, Qualcomm's green, TSM is green, Intel's green, SMCI. SMCI is swing traded from. See, this is the thing about companies that have a bad earnings or a good earnings, but a bad reaction. So let's look at Snowflake and SMCI. SMCI had a great earnings, but they sucked on gross margins. So the stock went from, I think, 680 to 486. Now the stock is back at 611. So it got oversold. Now, do I think SMCI is the thing you want to hold for the next decade, given it's a hardware business? Gross margins are mainly hardware margins. It's not like as exciting as video. No. Therefore, a swing trade from 486 to 611 is a very successful swing trade. Snowflake, very similar, great earnings. But the one thing that I hated about the earnings was that the communication on the call was so awful that it instilled no confidence that you could justify selling it off because you just don't want to trust your money with that management. Now, the question is, at what point does Snowflake become SMCI at 485? Is there a world where Snowflake at 100 is SMCI at 485 and there's a nice swing back up to 130 because the earnings were still good, growing at 30% top line? Or is this thing just look out below? It's going to $50. There's no moat. There's no way they sustain themselves. And this thing is just dead forever. I don't know, but the market will let us know in a few months kind of how they think of it. But maybe it is an opportunity just like SMCI was. NVIDIA at 127. So NVIDIA's up 3%. Amazon at 176. Tesla at 216. All the Mag 7 catching a major bid right here. And the Mag 7 seeming to like the momentum before JPOW Speaks. Robinhood as well getting some momentum. Robinhood right here, 2019. And AMD also getting some momentum today as well. Remember, AMD's top was 225, so AMD is still well below that, but it is recovering nicely from that 120 low that it was at a while ago. Where's Palantir? Are we getting some momentum there? Yeah, we're kind of stuck on Palantir, up 0.5%. For those that are just joining, we did get a new partnership today for Palantir. Not really moving the stock because it's not that big of a deal, but Sampo 3-year partnership, no money disclosed in the deal, but that is a good deal. Oh, Alex Karp did sell more shares yesterday, along with Ryan Taylor. So insiders, I think, now have sold about 4 million shares, roughly, give or take a couple 100,000 in the past week. So that is some information that everyone should know. We did get some insider selling. And again, it makes sense. My perspective here is that if you're up 100% year to date on a stock, you're probably going to take some profits. But we did get some selling over the past couple of days. What time are we going inside Jackson's Hole? Okay, that's interesting. But 10 a.m. 10 a.m. We will be witnessing the whole of Jackson and seeing what he has to say. AMD as well. Lisa Su sold 80,000 shares yesterday for 12.6 million. I don't know if that's scheduled or not, but she did sell yesterday. So you had 80,000 shares that were sold from Mrs. Su. And we saw some more selling there. I don't think Jensen has sold in a while, but he obviously sold a ton, a couple weeks ago. But since then, he hasn't really sold too much. He only sold like 0.1% of his stake, which is crazy because he was selling, hundreds of thousands of shares. But it wasn't enough to necessarily get the needle moving to the downside because he had liquidity and people were willing to buy those shares. Oh wow. Okay, so we have Elizabeth Warren on CNBC. Do we want some do we want some entertainment before we have JPOW? Well, we also have the Atlanta Fed. So let's listen to a little bit of the Atlanta Fed. This is one of the guys that votes on cutting or not. Let's listen to a couple minutes of what he has to say going into this JPOW meeting. He's going to give us a little bit of a preview about what to expect from JPOW. And then if we have some time after, we'll listen to Warren say some things if you guys want to see her say some things. Let me pull this up. And then JPOW will be soon. All right. So this is Bostic on rate cuts and what he expects going forward.
Here, Raphael. Does it feel to you like taking in all of the data that's out there, all of the economic data, that this is a turning point here in Fed policy?
Well, I do think that. I mean, I think it's safe to say that in the sense that for 2 years now, the inflation part of the mandate has really been the main focal point. And as inflation has come down, as the unemployment rate has come up, the risks to both sides of our mandate have really come much more into balance. And we're going to have to think hard about sort of what's happening in labor markets so that we can try to get to that elusive calm, orderly return to normalization.
I was looking at the tail of the tape, and you've been at this inflation fight, if you count it from November 21, for 30 months. So
And again, when he says we've balanced our dual mandate, that means he's saying inflation is not our highest priority anymore because things have changed, aka the labor market got weak. Therefore, we have to think deeper about how do we balance the mandate, which means probably cutting rates to make sure that we can maintain maximum employment, which is the other part of their mandate.
I guess I'm looking for a more definitive answer here. Is that part over, and are we about to begin a process of normalizing rates from restrictive to less restrictive?
Well, I think we're close. Look, at the very beginning of this, I said we were.
Wow, he just said, I think we're close. I mean, dude, I think the market's pumping because they think if the president's going to be that bullish, you would imagine JPOW is going to be that bullish.
We're going to have to raise rates, and we're going to have to stay at a high level for a long time.
Right.
We've been there for a long time, and now the numbers are starting to move in a direction which suggests that our policy has had its effect, and we can start the pathway to back to a normal policy.
Wow, dude. I mean, that is the most explicit I've seen Bostic ever say it. Our policy has had the effect in past tense. We can start the path back to normal levels. I mean, if JPOW sounds like that and we don't get to sell the news, I would imagine the market's going to pump.
Posture. Look, we can't wait until inflation is at 2% itself to start moving. Inflation's come way down, so that tells me that we.
Okay, guys, I'm sorry to keep pausing, but he literally just said we cannot wait until inflation is at 2%. That is opposite of what the Fed has been saying for the past year, that we need to see 2%. I don't know how much more dovish it could get.
We have to really think hard about that. And then on the other hand, we've had a lot of positive momentum in labor markets. That momentum seems to be easing up a bit, and that means that it is a sign that we're getting back to a much more normalized place.
I want to know how much currency you put into one of the arguments that kind of floats around in the hallways here, which is that right now, the Federal Reserve, on a real Federal Reserve funds rate, which is an inflation-adjusted funds rate, because the funds rate has not come down, inflation has come down. You know the argument. How much currency do you put in this idea that you're more restrictive now than you were when you raised to 538, and that no matter what's happened almost no matter what's happened in the economy, you need to be less restrictive?
I think there's a case to be made on that. And, I've talked about passive tightening like more than a year ago. So I do believe that that's a thing. For me, I think the biggest issue and the focus that I've had is inflation sustainably moving back to its 2% target. And for the first part of this year, it was not clear that it was.
Right.
And so now for me, I've just really tried as much as possible to get that sense. And I'll say the numbers in the last couple of months have come in quite positive, have made me more confident about that. And I'm hopeful that the next 2 months worth of data points continue that pathway, because then it would say we're moving there. One last thing I would just point out, though, if you look at where inflation is, it is not particularly close to our targets. So like we have an underlying inflation dashboard on our website.
Right.
It's all flashing red still. Now it is not as red as it was. Like before, it was like bright red. But we still have a ways to go. And I don't think it's in our interest or in anyone's interest to just assume that we're done. And so we don't have to worry about it. So that's the other part that I think everyone needs to be mindful of.
I get that, which is why I sort of asked about this passive tightening thing, which is it's not really that you're at or near target yet. It's that you have scope to become less restrictive, but still putting downward pressure on both the economy and inflation.
Which means 25 bips, not 50 bips to start. I think that's basically what he's insinuating there. He's saying, look, inflation is still bad, but we obviously have to have our dual mandate. So we're not going to do 50 as you guys think we're going to do. We'll probably do 25. Now, if JPOW hints it's going to be 50, then the market might really like that.
Even if, for example, you get an upside surprise of 0.3 versus a 0.2 in the next one, it doesn't change the trajectory because you're on the way there and you already have quite a bit of restrictiveness in the funds rate right now.
Well, the argument is it makes total sense, and I totally agree with that. Here's what I would say. Inflation has come down faster than I expected, right? And for me, that says that it may be appropriate to pull forward our first rate move. I was in the fourth quarter. My outlook has been for the fourth quarter for quite some time.
And you only had one cut.
And I only had one cut, right? And so
is that changed now?
It is in play. And we in a couple of weeks we'll have to do another SCP submission into the dot plot. And so as part of that, I will come to a more definitive view in that perspective, because I got to put a number in the table. But I will
Did
say,
you want to whisper the number to me now?
not right now.
Okay, all right.
Maybe
Okay.
in a couple of weeks
Okay.
I'll call you. But look,
Sure.
I think that
Dude, that was so awkward. Like, I get how he's trying to make like a fun joke there, but like, if you just saw his face, he was just like, no, dude, like, you don't even, like, I'm gonna fucking go to jail if I even think of doing that. So yeah, they are definitely not gonna give us any hints of that soon. But again, if the market can interpret and JPOW is way more bullish on that dot plot, or his words are insinuating a bullish tone on that dot plot, the dot plot is just how many times they think they're going to cut over the next couple of years. Well, that's obviously going to be bullish for the broader market.
you can't ignore the data. The data has come in a way which would suggest that it's going to be appropriate to be closer to moving than further. And for me, I just want to make sure that the next couple of data points are consistent with that.
Right.
And then we'll see where we are.
Is the unemployment rate also higher than you had previously forecast?
It is.
Meaningfully so?
I wouldn't say meaningfully so, in the sense that the unemployment rate today is still, by historical standards, low. Right. We don't have a crisis in labor markets. And the way I describe them is they're weakening, but they're not weak. I want to try to remind people, right before the pandemic, we had one of the tightest labor markets that we've seen
before the pandemic.
Before the pandemic.
And then we lost 1 million people, and
then it became super acute.
Right.
And so the easing is coming off of that super acute environment.
Sure.
And so for me, I think the thing to be looking at right now is whether that weakening is accelerating in such a way that it starts moving closer to weakness. Now, that's not what we're seeing now. I talk to businesses all the time.
Right.
What they tell me is that while they're more lukewarm about hiring new workers, they don't have in their outlook laying people off as the modal thing. And
how did the 818,000 revision affect your view of the job market?
It didn't really change it that much. You know, our folks have told me that, you know, the world is changing in ways such that a lot of these data collection techniques,
we need to do better.
It's just hard. Right.
Wow. Even the Fed is saying they don't trust the BLS. Even the Fed is saying, hey, we don't care because we don't think it's accurate. We really need to fix this accuracy part of jobs in America, because the Fed should be able to trust these numbers.
And so they were telling me, you know, there's going to be a revision. Whatever the number is, you should not assume that it's telling you a different story than what we're hearing from the hundreds of businesses and leaders across.
That's good advice for investors. Real quick, the market is priced for 4 rate cuts this year, or 100 basis points, 200 over time. I want to ask you what you think about how the market is priced, but I'm also interested in this idea. Where do you need to get to? Where should you be if you need to provide stimulus to the economy? In other words, how restrictive do you think you are?
So, look, I think we're restrictive. Earlier this week, I was with a bunch of folks who are in the housing industry.
Right.
And when you talk to them, they're like, it is very restrictive, and there's no question about it. And there's not really a lot of ambiguity or debate on that point. So I do think that it's real. I do think the restrictiveness is real.
Right.
But there was a lot of momentum in the economy because of how we experienced the pandemic. And I think a lot of our restrictiveness has been trying to sap that up so that we're back to just a more normal type of economic environment. So look, I think that we're in a pretty good place right now. But I don't assume anything is going to stay that way. And
so is 100 crazy for this year? 200 crazy in a full year?
So, okay, let me say this. The markets have been eager to get us to be finished. And for me, I think we have to really remind ourselves that the U.S. economy doesn't move that quickly, and that patience is going to be warranted. And then the other part for me is we've seen through the last 2.5 years, the unexpected seems to routinely happen. And so I just have to keep my eyes open for that and not presuppose any pathway, because that will send a signal that I think is not really going to be helpful.
Wow. What an interview. For those that are just joining, that was Fed President Bostic basically telling everybody that he thinks inflation is coming down. He thinks that the unemployment is starting to heat up. The labor market's starting to weaken. And that he feels like it's going to be a gradual process, but essentially insinuated that we don't have to wait till inflation literally gets to 2%. He verbatim said those words, but rather our dual mandate is around having maximum employment. And right now we are absolutely not seeing maximum employment. Now we're not seeing horrible unemployment, but we did go from 3.4 to 4.3% in the past 8 months on unemployment. And the Fed is looking at that in a pretty important way. We've got JPOW in 5 minutes. Markets, let's take one last look at it before we see what JPOW has to say. Markets, I believe, are still pumping on this pre-JPOW speech. And part of the reason the markets might be pumping is because of what Bostic said. Palantir at 32.33. Yeah, look at the S&P, up about 0.62%. Snowflake just getting hammered again, down 1% right now in Snowflake. IWM at 215. Robinhood right now is up a little bit as well. Tesla 216. Microsoft 417. Maybe the markets, Robinhood 2027, maybe the markets interpreted what Bostic said, because every time one of these Fed presidents speaks, it goes through like a ton of NLP algorithms that then dissect the words and then try to apply that with the mathematics of the market. And maybe the algorithms essentially said, hey, he thinks inflation's coming down. He thinks labor market's weakening. The odds of a rate cut going up are more likely. This means you should buy. Because I think a lot of those algorithms are essentially based on putting all those variables in one place and then seeing what you get out from that. So that interview happened about an hour ago. That interview was one of the most dovish interviews I've seen. The last part of that interview was just him saying, hey, like, you know, it's going to take some time. We're not going to get, 200 basis points off in a couple of weeks. But if you give us some time, we will be able to do this effectively. That is probably what you want to hear. And I can't take away anything hawkish from that interview at all. Whereas in 2022, if Bostic was doing that interview, it would be a whole different vibe. So I think that was a good interview, folks. And now we're going to see how this ends up playing out when JPOW talks in 4 minutes. In 4 minutes. All right, so let's look at the results of the poll. The results of the poll. I'm going to close it in 1 minute. So get your votes in. I'm going to close it in 1 minute. And that'll be it, because we can't vote while he's talking, because then we'll see if the market dumps or pumps. But we got 2,200 people who voted. We have 64% say pump, 36% say dump. We have some bulls in the chat, and the bulls are at least winning on this poll. Hopefully the bulls win on the actual results of the day. I'm nervous, bro. I am nervous. Nervous. Hey, Amit, can you imagine being Fed president? We were talking about this earlier this morning. If I was Fed president, dude. By the way, can the Fed presidents own stocks? Because like if I was Bostic and I had a crap ton of IWM, like in that meeting when they're like, hey, raise your hand if we should cut rates, I would walk into that meeting after being done listening to a Tom Lee interview, and I would be like, yeah, I think we should cut rates, or we should definitely not raise rates. I don't think they're allowed to own stocks, dude. Well, if politicians can own stocks, I would imagine the Fed presidents can own stocks. But that would be crazy, right? Because if you own a lot of stock, I mean, like these rate cuts, you literally have your finger on the trigger in terms of how you can affect what happens to rates. If they do, they must be in blind trust. Yeah, probably. JPOW's salary is $190,000 a year. For those that didn't know, JPOW makes $190 a year. So the Fed president is not like, some $1 million job or anything like that. But I would imagine JPOW, when he retires, he's going to write a book. He's going to, do speeches. He's going to talk about the Trump presidency. Like, he's probably going to get paid millions of dollars just to like be at these economic conferences. And he's going to make a lot of money on the backside versus just from his salary at the actual job. Also, you just get to be influential forever. Like ex-Fed presidents like Dudley, they are very, very influential. And whenever they say something, the market listens. And I think there's a level of narcissism and power that people get from that after they retire. Kind of like former presidents, dude. Former presidents, they had so much power for 4 or 8 years, and then that power stripped away. So I think at some level they like feeling that power, which is why they go to all these conferences and speak and all this stuff. Like, why is Bill Clinton still speaking? It's like, dude, like in terms of like these conferences, right? Like, he's not the president anymore. He doesn't really have that much of an impact, but people still care about him because at one point he was. Same thing with Obama. So I think he's definitely going to get paid on the back end of this when it's all said and done. But in 1 minute, we're going to see what he ends up saying. JPOW's a 50 million net worth. Okay, I don't know if that's accurate or not, but if that is, I'm curious where the heck he got his money from, because that's a lot. They usually, yeah. All right, so we are starting. It should be starting in just about a minute, folks. And we will see what JPOW has to say. That's what it looks like. Again, it's in Jackson Hole. There you go. All right, looks like we're getting started. think they're probably gonna have a speaker introduce JPOW. Yeah, there she is. Okay, here we go. We're starting.
All right. Good morning. Thank you, and welcome to the first day of sessions for the Federal Reserve Bank of Kansas City Jackson Hole Economic Symposium. My name is Karen Dinan, and I'm going to be your moderator for today's sessions. As you heard last night from Jeff, the topic for the symposium is reassessing the effectiveness and transmission of monetary policy. So it's a super important topic, particularly right now. And we've got some great papers lined up for this morning. We've got 2 papers, and we also have a panel lined up for that. But before we get to any of that, I am delighted to say that we have Federal Reserve Chair Jay Powell here to deliver opening remarks. So with that, let me welcome Jay Powell to the podium.
All right, folks, here we go. It's time.
Thank you, Karen, and thanks to our hosts from the Kansas City Fed. It's great to be back here today. 4.5 years after COVID-19's arrival, the worst of the pandemic-related economic distortions are fading. Inflation has declined significantly. The labor market is no longer overheated, and conditions are now less tight than those that prevailed before the pandemic. Supply constraints have normalized, and the balance of risks to our 2 mandates has changed. Our objective has been to restore price stability while maintaining a strong labor market, avoiding the sharp increases in unemployment that characterized earlier disinflationary episodes when inflation expectations were less well anchored. While the task is not complete, we have made a good deal of progress toward that outcome. Today, I will begin by addressing the current economic situation and the path ahead for monetary policy. I will then turn to a discussion of economic events since the pandemic arrived, exploring why inflation rose to levels not seen in a generation and why it has fallen so much while unemployment has remained low. So let's begin with the current situation and the near-term outlook for policy. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. The FOMC's primary focus has been on bringing down inflation, and appropriately so. Prior to this episode, most Americans alive today had not experienced the pain of high inflation for a sustained period. Inflation brought substantial hardship, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. High inflation triggered stress and a sense of unfairness that linger today. Our restrictive monetary policy helped restore balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remained well anchored. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. After a pause earlier this year, progress toward our 2% objective has resumed. My confidence has grown that inflation is on a sustainable path back to 2%. Turning to employment, in the years just prior to the pandemic, we saw the significant benefits to society that can come from a long period of strong labor market conditions. Low unemployment, high participation, historically low racial employment gaps, and with inflation low and stable, healthy real wage gains that were increasingly concentrated among those with lower incomes. Today, the labor market has cooled considerably from its formerly overheated state. The unemployment rate began to rise over a year ago and is now at 4.3%, still low by historical standards, but almost a full percentage point above its level in early 2023. Most of that increase has come over the past 6 months. So far, rising unemployment has not been the result of elevated layoffs, as is typically the case in an economic downturn. Rather, the increase mainly reflects a substantial increase in the supply of workers and a slowdown from the previously frantic pace of hiring. Even so, the cooling in labor market conditions is unmistakable. Job gains remain solid, but have slowed this year. Job vacancies have fallen, and the ratio of vacancies to unemployment has returned to its pre-pandemic range. The hiring and quits rates are now below the levels that prevailed in 2018 and 19. Nominal wage gains have moderated, and all told, labor market conditions are now less tight than just before the pandemic in 2019, a year when inflation ran below 2%. It seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon. We do not seek or welcome further cooling in labor market conditions. Overall, the economy continues to grow at a solid pace, but the inflation and labor market data show an evolving situation. The upside risks to inflation have diminished, and the downside risks to employment have increased. As we highlighted in our last FOMC statement, we are attentive to the risks to both sides of our dual mandate. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market. The current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions. So let's now turn to the questions of why inflation rose and why it has fallen so significantly even as unemployment has remained low. There's a growing body of research on these questions, including Gowdy Eggerson's work, which we'll shortly discuss. And this is a good time for this discussion. It is, of course, too soon to make definitive assessments. This period will be analyzed and debated long after we are all gone. The arrival of the COVID-19 pandemic led quickly to shutdowns in economies around the world. It was a time of radical uncertainty and severe downside risks. As so often happens in times of crisis, Americans adapted and innovated. Governments responded with extraordinary force, especially in the United States. Congress unanimously passed the CARES Act. At the Fed, we used our powers to an unprecedented extent to stabilize the financial system and help stave off an economic depression. After a historically deep but brief recession, in mid-2020, the economy began to grow again. And as the risks of a severe extended downturn receded, and as the economy reopened, we faced the risk of replaying the painfully slow recovery that followed the global financial crisis. Congress delivered substantial additional fiscal support in late 2020 and again in early 2021. Spending recovered strongly in the first half of 2021, and the ongoing pandemic shaped the pattern of the recovery. Lingering concerns over COVID weighed on spending on in-person services, but pent-up demand, stimulative policies, pandemic changes in work and leisure practices, and the additional savings associated with constrained services spending all contributed to a historic surge in consumer spending on goods. The pandemic also wreaked havoc on supply conditions. 8 million people left the workforce at its onset, and the size of the labor force was still 4 million below its pre-pandemic level in early 2021. The labor force would not return to its pre-pandemic trend until mid-2023. Supply chains were snarled by a combination of lost workers, disrupted international trade linkages, and tectonic shifts in the composition and level of demand. Clearly, this was nothing like the slow recovery after the global financial crisis. Enter inflation. After running below target through 2020, inflation spiked in March and April 2021. The initial burst of inflation was concentrated rather than broad-based, with extremely large price increases for goods in short supply, such as motor vehicles. My colleagues and I judged at the outset that these pandemic-related factors would not be persistent, and thus that the sudden rise in inflation was likely to pass through fairly quickly without the need for a monetary policy response. In short, that the inflation would be transitory. Standard thinking has long been that as long as inflation expectations remain well anchored, it can be appropriate for central banks to look through a temporary rise in inflation. The good ship transitory was a crowded one, With most mainstream analysts and advanced economy central bankers on board, I think I see some former shipmates out there today. The common expectation was that supply conditions would improve reasonably quickly, that the rapid recovery in demand would run its course, and that demand would rotate back from goods to services, bringing inflation down. For a time, the data were consistent with the transitory hypothesis. Monthly readings for core inflation declined every month from April through September 2021, although progress came slower than expected. The case began to weaken around mid-year, as was reflected in our communications. And beginning in October, the data turned hard against the transitory hypothesis. Inflation rose and broadened out from goods to services, and it became clear that high inflation was not transitory and that it would require a strong response if inflation expectations were to remain well anchored. We recognized that and pivoted beginning in November. Financial conditions began to tighten, and after phasing out our asset purchases, we lifted off in March of 2022. By early 2022, headline inflation exceeded 6% and core was above 5%. New supply shocks appeared. Russia's invasion of Ukraine led to a sharp increase in energy and commodity prices. The improvements in supply conditions and the rotation in demand from goods to services were taking much longer than expected, in part due to further COVID waves in the United States. And COVID continued to disrupt production globally, including through new and extended lockdowns in China. High rates of inflation were a global phenomenon reflecting common experiences: rapid increases in the demand for goods, strained supply chains, tight labor markets, and sharp hikes in commodity prices. The global nature of inflation was unlike any period since the 1970s. Back then, high inflation became entrenched, an outcome we were utterly committed to avoiding. By mid-2022, the labor market was extremely tight, with employment increasing by 6.5 million jobs from the middle of 2021. This increase in labor demand was met in part by workers rejoining the labor force as health concerns began to fade. But labor supply remained constrained, and in the summer of 2022, labor force participation remained well below pre-pandemic levels. There were nearly twice as many job openings as unemployed persons from March 2022 through the end of the year, signaling a severe labor shortage, and inflation peaked at 7.1% in June 2022. At this podium 2 years ago, I discussed the possibility that addressing inflation could bring some pain in the form of higher unemployment and slower growth. Some argued that getting inflation under control would require a recession and a lengthy period of high unemployment. And I expressed our unconditional commitment to fully restoring price stability and to keeping at it until the job is done. The FOMC did not flinch from carrying out our responsibilities, and our actions forcefully demonstrated our commitment to restoring price stability. We raised our policy rate by 425 basis points in 2022 and another 100 basis points in 2023. And we've held our policy rate at its current restrictive level since July 2023. The summer of 2022 proved to be the peak of inflation. The 4.5 percentage point decline in inflation from its peak 2 years ago has occurred in a context of low unemployment, a welcome and historically unusual result. So, how did inflation fall without a sharp rise in unemployment above its estimated natural rate? Pandemic-related distortions to supply and demand, as well as severe shocks to energy and commodity markets, were important drivers of high inflation, and their reversal has been a key part of the story of its decline. The unwinding of these factors took much longer than expected, but ultimately played a large role in the subsequent disinflation. Our restrictive monetary policy contributed to a moderation in aggregate demand, which combined with improvements in aggregate supply to reduce inflationary pressures, while allowing growth to continue at a healthy pace. As labor demand also moderated, the historically high level of vacancies relative to unemployment has normalized primarily through a decline in vacancies, without sizable and disruptive layoffs, bringing the labor market to a state where it is no longer a source of inflationary pressures. A word on the critical importance of inflation expectations. Standard economic models have long reflected the view that inflation will return to its objective when product and labor markets are balanced, without the need for economic slack, so long as inflation expectations are anchored at our objective. That's what the model said. But the stability of longer-run inflation expectations since the 2000s had not been tested by a persistent burst of high inflation. It was far from assured that the inflation anchor would hold. Concerns over de-anchoring contributed to the view that disinflation would require slack in the economy and specifically in the labor market. An important takeaway from recent experience is that anchored inflation expectations, reinforced by vigorous central bank actions, can facilitate disinflation without the need for slack. This narrative attributes much of the increase in inflation to an extraordinary collision between overheated and temporarily distorted demand and constrained supply. While researchers differ in their approaches and to some extent in their conclusions, a consensus seems to be emerging, which I see as attributing most of the rise in inflation to this collision. All told, the healing from pandemic distortions, our efforts to moderate aggregate demand, and the anchoring of expectations have worked together to put inflation on what increasingly appears to be a sustainable path to our 2% objective. Disinflation while preserving labor market strength is only possible with anchored inflation expectations, which reflect the public's confidence that the central bank will bring about 2% inflation over time. That confidence has been built over decades and reinforced by our actions. That is my assessment of events. Your mileage may differ. So let me wrap up by emphasizing that the pandemic economy has proved to be unlike any other, and that there remains much to be learned from this extraordinary period. Our statement on longer-run goals and monetary policy strategy emphasizes our commitment to reviewing our principles and making appropriate adjustments through a thorough public review every 5 years. As we begin this process later this year, we will be open to criticism and new ideas while preserving the strengths of our framework. The limits of our knowledge, so clearly evident during the pandemic, demand humility and a questioning spirit focused on learning lessons from the past and applying them flexibly to our current challenges. Thank you.
Okay, that's it. That's it, folks. Markets. So I ended up not closing the poll, so we'll just keep the poll and you can vote. Let's see in the next 5 minutes, do the markets keep this pump or not? What he said, I know some of you may think he didn't say too much. He said one quote that was the most important quote out of this entire 15 minutes. It was a 17-minute speech, a very short speech. If you were expecting Q&A, there was no Q&A. It was going to be a 17-minute speech. Let's see if the market's up, but let's see if it holds. I'm curious, will the market hold on this news? Or is it kind of like, all right, that was fun, and now we'll move on? S&P, you got a nice green candle right there at 561. There's the red candle forming. So we're starting to see a little bit of red right there. I'm curious now if that dip kind of holds up or if people come in. Bitcoin was at 62,000. Now it's at 61,700. So Bitcoin falling from that 62,000 level. We did get to 563 on the S&P at one point. Now it's at 561. Robinhood was at $20.69. Now you're at now you're at $20.50. IWM is up 2%. It was up almost 2.5%. Again, there's that red candle right there. You guys are seeing the top and then the down to the red. Palantir going below 32. That one looks like it's about to go red. NVIDIA was up 4%. At one point, it was at 129.35, taking away all the losses from yesterday as gains for today. But again, you've got a red candle right there from 129 to 128. So as soon as the speech ended, we got red candles across the board, but not red candles to the point where the entire market turns red on the day, but rather just red candles from the top of the tippy top of the pump, which means now begs the question, what happens throughout the rest of the day? So far, what I'm seeing is we are going red. We are definitely seeing some red. There's a green candle right there trying to stop the red on the S&P. But we are going red. Rocket Lab still holding up at 698, 1.97%, Palantir 31.95, S&P 500 561. Okay, so what did JPOW say? There was one quote. You guys probably saw my face light up when I heard this quote, but there was one quote, and I think this is the quote everyone's going to be talking about. The quote is, The upside risks to inflation have diminished and the downside risks to unemployment have increased. The time has come for policy to adjust. I think that's pretty bullish, dude. S&P now going green right here. I think that's pretty bullish. Basically saying, hey, inflation was our concern 8 months ago, not the concern anymore. Unemployment is becoming a concern, aka we have to cut rates to stop unemployment from becoming a major concern, just like we raised rates to stop inflation from becoming a major concern. And then he literally says, the time has come for policy to adjust. It makes all the sense in the world why the market's green, because they are absolutely pricing in at this point. Forget 100% chance of a rate cut in September. It's like 1 billion% chance that we're getting at least one rate cut in September of 25 bips. The question now is going to be, how much can the market price in for the next three? The market kind of is already priced in the next three, but will we get those next three is what's going to be the question going into November and December for the rest of the year. Agreeing with Adam right here. This was absolutely the most bullish, dovish speech you could imagine from JPOW. And we just listened to Bostic, which was one of the Fed presidents right before the speech. And he was also as bullish and dovish as you could expect. So nothing that crazy. Nick Timmerose from the Wall Street Journal, he just tweeted, the Powell pivot is complete. So this is one of the sort of the best Wall Street Journal reporters that covers the Fed. He says, Powell is dovish across the board from the same stage where he 2 years ago signaled the Fed would accept a recession as the price of restoring inflation. So 2 years ago, again, the JPOW basically said, we're probably going to have a recession to be able to get rid of inflation. Because again, in America, you just cannot turn into like Zimbabwe or Venezuela when it comes to inflation. You gotta get rid of inflation. And we went through the pain to get rid of inflation, but now things have changed. Some quotes again, the cooling in the labor market conditions is unmistakable. Second quote, it seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon. Basically saying, hey, job growth is not bad. Basically, good news is not bad news. Good news is actually good news because we want people to have jobs because that's good for the economy. Third, we do not seek or welcome further cooling in the labor market. He's being very bullish to the fact that cutting rates is good because we don't want to see labor markets get worse. And then finally, the direction of travel is clear and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we further make progress towards price stability. That quote right there where he says the direction of travel is clear and the timing and pace of rate cuts will depend on the incoming data. He's not saying the timing of rate cuts is not, he's not saying rate cuts, he's not questioning if a rate cut could happen, and he's not questioning the possibility of a rate hike. He's questioning the timing of the rate cut, which is a totally different tone from JPOW, basically saying, yeah, we know we're going to cut. It's just a question of timing, but we're definitely not going to raise, and we're probably not going to pause going forward into the future. JKL, thank you for the $5 super chat. This was my keep my job speech, soft landing into the fall. Yeah, pretty much it was just keep his job speech. But again, the unemployment data signals that S&P now, you got a nice green candle right there. Unemployment data signals that JPOW had no choice. Like, it's not up to him anymore. The data is clear. It's time to cut. And we're likely to get that in September. So there's the green candle on the S&P. There's a nice green candle right there. There was the bottom at 560.9. Now we're at 562. The top was 563. Snowflake even went green on this news. Snowflake's up 1%. Snowflake was bottoming at 113 during JPOW's speech. Robinhood at $20.53. Robinhood just trying to break out. 2069. There's about 20,000 shares of resistance for Robinhood. That's why it got rejected at that level. But Robinhood up almost 3% on the day, or 3.2% on this. Palantir right back to 32. Bottomed at 31.82, now back to 32. NVIDIA right back to 129, up 4.2%. NVIDIA getting everything it lost yesterday. Tesla also getting everything it lost yesterday, up 4.6%. The NASDAQ up 1.46. Meta 535. Microsoft 418. SoFi up 2% on the day. PayPal up 20 bips. Hims and Hers 1709. UiPath 1221. Even Zoom, which Kathy Wood sold out of yesterday entirely, is up 69.56, up 2%. Netflix up 0.5%. Palo Alto Networks had a great earnings this week, up 0.65. Where's CAVA? I think CAVA's up 15%. Where's CAVA? CAVA up 16%. Goodness gracious, bro. If you've had CAVA, congrats. I mean, what a hell of a pick if you had CAVA stock this year. Oh my gosh, 16% on this JPOW speech, and obviously a good earnings. S&P at 562. Yeah, there's a green candle that's becoming real. Those are 3 green candles in a row. Those are 3 in a row, folks. Markets are green on this. Markets are definitely green on this. Now we'll see if we get to sell the news. But remember, after FOMC, when markets were like really green in July, the sell the news happened like kind of quick. It happened like within the hour. So we still have some time left, but definitely if we're gonna get to sell the news, we're gonna see. I don't think it's gonna happen at 2 p.m. I think it would happen like soon. And so far, markets are liking this. Let's see if we can get some coverage on CNBC about this JPOW speech and what people think about it. Let me know what you think in the chat, but I think this was good. I think it was a good speech. And we kind of expected it to be good, and markets are reacting appropriately to the fact that it seems to be what they wanted to see, which is not bad at all. All right. Okay, here we go. So let's get some coverage. And then let's see what we've got going on. So let me share this real quick. All right, here we go. This will start our coverage. Let's get into this. HUD's doing well. Yeah, a lot of these, and they did a little bit of a U-turn from the slight red candles they had just a couple minutes ago.
Cuts will depend on incoming data, the evolving outlook, and the balance of risks. So as expected, no real specificity on the size of rate cuts or the pace of rate cuts. He can't do that right now, but he did affirm the market's view and I would say added a little more on the inflation front, that inflation is becoming less of a problem. He says, my confidence has grown that inflation is on a sustainable path to 2%. On employment, he says it seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon. So again, not as worried about inflation. We do not seek or welcome further cooling in labor market conditions. Guys, overall, I would say a pretty dovish speech from the Fed chair, as dovish as he can get at this point without knowing the next jobs report or exactly how much they want to ease or what it's going to look like. Clearly, he's moved in the market's direction, and the market likes that.
Anything surprise you?
Not really. I would say that, you know, look, he went through an most of the speech was about why inflation, why we've had inflation in recent years, everything from why he thought it was transitory, and he made a little joke about a lot of folks were on that transitory boat with him. It wasn't just him, and a lot of them in the audience as well. He talked about supply shocks. He talked about the war in Ukraine. He talked about a very tight labor market. He talked about demand increasing, and he talked about why the policy worked. You know, interestingly, guys, he did not talk about greedflation. He did not talk about corporations unnecessarily raising their profit margins. So, you know, in a pretty long list of the why on inflation, that's interesting.
Would he really do that? I mean,
no, he wouldn't do that. But he also
You're just using that.
But if that was really part of the economic story here, as being framed, I think by certain politicians, I don't know, corporations passing on high inflation.
He certainly took a pass on defending the Fed from moving in an election year. Very little mention of politics in general. Did, though, Steve Leisman say that the cooling in the labor market is unmistakable and that they do not seek or welcome more of it. Your thoughts?
Yeah, that was a repeat from the July press conference. I think this is a landmark speech. You go along and you put stakes in the ground over time, and a lot of times he puts them here in Jackson Hole. There was the speech, the 8-page mic drop speech, the short, sharp, shocked speech where he said, we're going to fight inflation and there may be pain. He came back the next year and said, this is going to take a while and there could be pain. That was another milestone. This idea of it's time to adjust policy, what we're talking about here in terms of the change, you'll notice he said the timing and, I'm going to get the exact language, the timing and pace of rate cuts. So what we're talking about here is a process. And I think he affirmed that process. It was a question I asked him in July, would this be a process? And he suggested, yes, it would. So now he's sort of come down. And the importance also, I think, of having the discussion about inflation, the history part, which is less interesting from a news standpoint, but more interesting from a standpoint of policy going forward, is one we're going to say, hey, what did we do right and what did we do wrong here? He sort of said, we didn't get the transitory part right, but we did keep inflation expectations under control, and we addressed it correctly with policy, and now we're at a place where we're going to be adjusting that policy. The missing thing was How restrictive does the Fed believe it is right now? How far can it go? How far does it need to go in terms of getting its policy to the right place? That's going to be the debate inside about exactly where we're at in terms of where that neutral rate is. That was not part of this discussion. It's probably part of the next discussion.
Steve, people are looking back to the speech 2 years ago, and Sarah mentioned this briefly, where he said that the move.
Guys, market's still pumping. Markets are still pumping. We are not giving this up yet. S&P 500 is, wow, 562.68, almost at the same level it was at right at the top of JPOW speech. So if we're going to get to sell the news, it's not happening yet. And so, I guess we need the market to get like scared over the next couple hours. But as of now, the market is digesting it and they like it.
The working until the job is done would bring, quote, some pain to households and businesses. What do you think his characterization of the pain that we did sustain would be?
I'm glad you brought that up, Carl, because I had that pull quote. Guys, I don't know if you can bring that full screen up. He said, with an appropriate dialing back of policy restraint, there's good reason to think the economy will get back to 2% while maintaining a strong labor market. So effectively, he's backing off that pain prediction. And he's that's the kind of saying, hey, I think we can do this soft landing thing. We didn't really have to have as much of the pain other than, of course, the inflation pain that he talks about, but did not have to have the joblessness. And so now he's saying, we do not welcome further weakening in the job market. So we can cut it off here, make that adjustment, and maybe get out of it. How does the Fed do this soft landing? Well, it's tried a couple times. It's maybe made it once and not all that often has it succeeded. So this will be pretty historic if they pull it off. And he's kind of telling you, I think we can do that if we adjust policy now.
One other reason for the market move, and Neil Judd is just pointing this out from Renaissance Macro, Steve, is he did not use the word gradual, unlike some of the other speakers that we've heard on the Fed. In other words, he's not taking off the possibility or the option of doing a larger move if they feel like they have to do that.
I think that's fair. He did sort of hedge that idea of the timing and pace. But I think, Sarah, the other reason for the market optimism is his idea of adjusting policy was unhedged here in a sense that it creates scope for, let's assume next month, and on the downside, we get a 0.3 on inflation. I don't think that changes the idea that the Fed can cut rates, become less restrictive, and yet remain restrictive. I think what we're talking about is the next series of data points are going to adjust, how far the Fed goes, how fast the Fed goes. But when he says this line, it's very direct. The direction of travel is clear. That's an unhedged statement. And I wonder, Sarah, if the market was perhaps thinking the speech itself would be a bit more hedged.
That's a good point. He did not hedge at all. When he said the path of travel is clear, it is a question of the timing of rate cuts based on data. He is not saying if, he's saying when. Maybe the market thought he would be a bit more hawkish. He was not. And as a result, the market seems to like it.
Certainly a possibility. I mean, pretty broad rally we're seeing right now across the board, the semiconductor equipment on top, but also some of the sectors that benefit from lower rates are rallying really hard. The home builders, for instance, the home improvement stores like a Home Depot, consumer discretionary is having a really nice day. Technology's on top again, though, Carl, because NVIDIA is up 4.2%.
We're going to talk more about that in the coming days. Steve, I wonder if you think his speech primes the market with the ability to absorb a downside surprise on August jobs.
When you say downside, do you mean a weaker than expected surprise or a hard? Because it depends on which side of the trade you're on, obviously, right?
Yes. Yes.
That's like when I see these notes about a bad day for oil. I think that's a good day for oil when there's a bad day for oil. But I think it does. I think that a downside surprise is something that would make you lean more into the 50. About even would say, okay, we're going to do a 25 here. And an upside surprise, I think, is less consequential in the sense that, again, I believe he's put a kind of parameters around the idea that we're cutting rates if data is going to come in within a tolerable range here. Obviously, a huge upside surprise on the inflation data would give us pause here about what the Fed might do next. But what I think we're talking when he says the direction of travel is clear, the time has come to adjust policy. all that means to me is he feels pretty confident that within a certain tolerance of the data, that's what we're going to do here.
You know what I was wondering, Steve, is, the Jackson, he lived up in terms of his sort of history-making, policy-changing Jackson Hole speeches, which I was talking about, tends to occur. And I was just wondering if it's the time of year, it's a coincidence that it's always sort of in this transitional period, or if they really do look at this as one of those kind of moments.
My reporting, Sarah, suggests to me it's the latter. They work very hard on this speech. I believe they start working on this speech months ahead of time. And they do see this as an important part of the.
Look at the delta between the 10-year and the 2-year as well. They are getting very close to uninverting, which is relatively bullish for the markets, but both of them down today again.
Overall communication to the markets and to the country about where monetary policy is. And I think they know that the market is expecting something, and so they deliver it. I think there are times they feel like they'd like to get off of that train of expectations and not having to fulfill it, but I know they work harder, and I know it's something that...
All right, so I am still waiting for the rug pull, if there is one. I don't want to say we're straight up green for today. I know we have a lot of hours left, but I'm just still triggered from FOMC in July, where we were really green and then it got pulled out right at the end of the day. I don't know if that's going to happen this time, dude. I don't think we have to end super, super green, but I definitely don't think we have to go and close red. It is a Friday. We're going to have algos. You're going to have market makers try to stop loss certain option prices. You're going to have people take profits, but still, there is nothing out of that call that makes me think you need to get out of the market. Outside of like historically, September is a little rough, so maybe you want to take some profits, hedge a little bit, that's fine. But if you were saying, hey, in this speech that JPOW gives, I need to hear something that makes me afraid, I don't think anything was there. And 2 years ago in 2022, when he gave Jackson Hole, that was the speech where everyone should have got the hell out, right? At least for the time being. But this is different. This is much, much different. And he definitively said we're going to get into a rate cutting cycle. Now, I think the biggest question is going to be, are the rate cuts actually bullish or not? I'm on the side of the camp that it's bullish. I know that if you're cutting rates, technically you're cutting because there's weakness. I think that argument, though, is just so inconsequential and naive because an economy is not going to be strong forever. There's going to be moments of weakness, just like there's going to be moments of hyper aggressiveness, which is what we saw in 2021. And that's when you raise or lower rates. So when people say, oh, you're cutting rates because the economy is weakening, it's like, yeah, no shit. The economy is weakening, but the cutting of the rates is supposed to stop the extent of the damage, which is the best example for this is 2018 into 2019. 2018, S&P fell a decent amount. I think it was almost 20% or 15% from August to December. And then by 2019, April, we were back to normal because JPOW cut rates, I think from 2 3/4 to 1.5. I might be getting the numbers off by a little bit, but that was your example of a bear market that was about to go super bearish turning into a bull market because of cutting rates. And actually 2018 was a bull market, but then it suddenly got bearish because of different issues that were going on, which caused the raising of rates. So, I mean, I think the cutting of rates is bullish. I think it helps the economy. I think it helps get momentum. I'm going to text TJ so he can come on because we're going to do our option segment now. But I think this was a great speech. I think this was a great speech. Douglas says we've been pricing in the rate cut since last year. The actual cut will be the sell the news. Yeah, and I wouldn't be surprised at that either. I think it will be a sell the news. I just, some of the bears are thinking when you cut, the market collapses. And I'm like, okay, I just don't think that's smart. I don't think that if the economy was genuinely 2008 level recession, even 2020 level recession, then I would agree. Yeah, cutting is into a bad environment. This is a great environment in a variety of different ways to justify it's a great environment. The biggest argument I have for this is earnings growth. Earnings growth across the board, 80% of S&P 500 companies beating by an average of 5%. So cutting should only be a catalyst, along with small caps. Again, the reason Tom Lee's so bullish on small caps is because they're growing earnings 20% compared to the S&P 500 on the delta. Wow, small caps at 219 right now. And their PE is 14, even if you would have the IWM go to 300 a share on the index. So the PE would still be significantly less. The S&P would be, I think, is at 24. The IWM would be at 14 if the IWM only got, or if the Russell only got to $300. So there is a lot of earnings growth in the small caps. Now, a lot of those small caps are crappy companies, but still there's a lot of growth there that is not cutting into a weakening cycle, because if we were in a horrible economy, small caps would be absolutely dead. Like Abercrombie would not be up 150% year to date, which is in the small cap index. Why? Because they increased operating margins by 700%. Why were they able to increase operating margins by 700%? Because people were buying Abercrombie clothes because the consumer was relatively strong. So a lot of the companies in the small caps that do suck, they are overcompensated by the companies that are producing real earnings. And as a result, the aggregate earnings of the index is underpriced compared to where the S&P is, which is why a rate cut is going to help them, not hurt them. So I'm on the side of the camp that a rate cut is good, but we can definitely see some volatility when we get that cut. And it seems like the market feels it's good as well. TNA is also great. Yeah, TNA leveraged against IWM. That thing's up 8% today. So that one up 7.6%. And I'm happy for the TNA and IWM holders, because it was a tough end of July into August, because that thing collapsed, badly. Obviously, if we have a recession, rate cuts are not the fun thing, or the small caps are not the fun thing you want to be in. But maybe we avoid that recession. TJ said he's backstage. TJ, I don't see you. Did I send you the wrong link? TJ, let me send you the link again, TJ. Maybe I sent you the wrong link. Or you might have clicked on the wrong link. But let me send it again and then click on this link. So we're going to get TJ on. We're going to look at the public portfolio, take a look at the moves he's making in options. We got a bunch of Robinhood puts. We have some Snowflake puts at 118 that we're going to figure out if we have to roll or not. What do we do with those? NVIDIA, I think we closed some of our puts, or we're closing some of our puts today on NVIDIA. And we have to make a decision if we're going to sell any covered calls going into earnings. So we have a lot of moves to make in the public portfolio. Oh, there he is. All right. All right, folks, let's get into the public portfolio, get into the options. And if the market starts to tank during this, I will let you guys know and see what happens. TJ, what's up?
What's up? How are you guys?
I'm good. TJ, do you like waffles?
A little. That's like kind of like pancakes, right?
Yeah, I had a dream today about waffles. And now I'm just like, dude, after the stream, if the market holds up, I can afford to buy some waffles. And I think I got.
Yeah, I have a few bites of like pancakes and stuff when we go to IHOP, but I can't eat the whole thing.
Yeah, I can never eat the whole thing. That is fair.
Yeah. How are you?
I'm doing
what's
good.
going on? They keep me up to speed. I woke up really late. My wife and I stayed up till 4 a.m. watching $1 Million Listing Los Angeles.
4 a.m, dude?
Yeah,
wow.
we want to buy a beach house, and she lived in California for over 10 years. I lived there for like 3. So, we've been looking to like Cancun and, at Anguilla. And then she was like, why don't we just go look for something like Malibu? So we try to get ideas by watching that stupid show.
Wait, you wouldn't move there though, right? That would just be like a vacation home?
Yeah, it's like 3 or 4 months a year. Like we'll be like, I think it's called Winter Texans or something like that. Like whenever weather's shitty over here, like if it's super hot, we'll go over there. And if it gets kind of cold, we'll go over there, that kind of thing.
Okay, that's a fun.
But realize I got to make more money, dude. Freaking real estate over there is so damn expensive, bro. It's motivating you though. Like, it motivates you to like, there's like really pretty shit in this world, and we got to go get it.
Yeah, 100%. And I mean, JPOW hopefully is going to help us continue to make that money so that you can buy that real estate in California.
So am I just hearing what I wanted to hear? But dude, is that like the most dovish she's ever been since this whole transitory thing happened?
I think that is the most dovish JPOW has been ever, because he basically confirmed that there is no doubt in the Fed's mind. S&P 500, 561, there's another green candle right there, that they're cutting rates. And that's it. That's what we need. That's what we needed. It's what we've been hoping for. And he said we're going to get it.
Agreed. We want to get into it?
Let's get into it. All right. Let's get into the public portfolio. I think we can start off with the hood position, because that's big, and then we'll keep going from there. You're up a house today. You're up 115 grand. Goodness, TJ. That's about to hit 7 million soon, dude. That's about a.
It's good. And there's 1.25 million that's still moving over from other accounts into this one. So when y'all see it bounce up, I'm not that great of a wheeler. It's just I'm just doing some consolidation.
Well, so you're going to get 12,500 on the 1% match. Let me ask you a question. Do you, given your account is bigger, do you care at all about that 1% match? Does that excite you?
I
Or
mean, dude, it's free money, so it's substantial because I think I've gotten like over 7,000 so far. It says pending, so it's like a dividend payment. I have no idea when it's going to hit, but when you hit the little gold thing, it says pending.
Right.
So
that's exciting. It's exciting.
Yes, I'm not sure. Yeah, I mean,
All right.
that's cool. So let's just go. Let's just go down with it. Let's start with this one. What do you want to do here? Do we got $200,000 tied up here for next Friday, and there's only $2,600 of meat on the bone? 4,400 came via a roll, and then remember we had gone from 21 to 20, 2150 to 20 or something back in the day. So this isn't like 100% accurate here because you got to take into consideration that we had a higher strike price at one point on like 50 contracts, I think. But bottom line, it's a real profitable situation here. Do you want to keep it on, or do you want to close it and get back into cash?
Yeah, I think let's close it. So to describe this to everyone, this is a $20 cash secured put on Robinhood. We were betting that Robinhood would be above $20 by August 30th. And we got paid a premium to put up $2,000 of collateral. How do we get $2,000? $20 times 100 shares. And they're up 70% because Robinhood's above $20 right now. And so there's no point to wait for another couple weeks. We can free up 200 grand of collateral, give back a little bit of money. There you go. And boom, that's how we do it.
Yeah, so I think it's a good move because it comes down to premium per day. So it's like, is there anything else that we could do that could give us more premium per day for tying up that same amount of capital for that duration of time? Right. And I definitely think that we can go find something that we're just as excited about, or essentially we can just stay in the cash and wait for a pullback, potentially even on Robinhood, and then we can probably sell the same exact strike price or maybe get the same premium that we just gave back, but instead of a 20, maybe we're at 1950 or 19. So it just kind of improves your position.
Yeah, and let me say to the chat, because me and TJ were texting about this a couple of days ago, but if anyone has a position on a new stock or a thesis on a new stock, please put it in the chat, because me and TJ have been wheeling the same things over the past basically 3 months now. We really haven't introduced anything new to the portfolio. So if you have any new ideas, something that's appropriate for wheeling, something that you think is meaningful to even look into, let us know, and we'll try to see if we can do some DD over the next couple of days.
Yeah, we're I'm very monogamous with my stocks, guys. Like that is something like making money in the stock market when you have a strategy that really, really works. It's hard to deviate because whenever you bring on a new stock, it does require 3 to 5 hours of your time to even make a decision as to whether or not you're like legitimately interested. If you're going to like really study this company, you know what I mean?
Yeah.
Listen to a couple of earnings reports on 2 times speed and whatnot. So it takes a lot more than, oh, check out this ticker, it's got juicy premiums. Well, dude, I can show you a lot of stocks that got juicy premiums. The issue is you got to potentially want to have to own them, right?
And you've been doing this for a long enough time where you've gotten in bed with the companies with the juicy premiums. Some of them you got burned on, some of them you were able to make whole, but it's a tough game when they have juicy premiums, but they're a crappy company.
Yeah, so but man, the quote of the day for you guys is making money is boring when you're doing it right.
100%.
I am a little bit of an adrenaline junkie, but not really in the stock market, aside from like my Neo play, which I actually closed out all the puts today for about a 50% profit at $4.
Oh, wow.
Because I want to get back into a real big cash position to potentially buy the dip on something. If there's a flash crash, like CrowdStrike's got earnings coming up. If the market doesn't like what they see, all of a sudden we look up at a 215 handle or something. Hey, can we turn this into a legitimate position? So I'm positioning myself for that kind of stuff.
And you closed out Neo because it's above $4 today, I imagine. That's why.
Yeah, and I was, I made 40% on a very, very risky play. It was about 45% actually. On a very, very risky play, and I could take half of, $480,000 off the table. So it's kind of like I got away with it. You know what I'm saying? Like I got away with it. Like don't push the envelope by leaving it on, and then now I'm having to roll this position longer because I wanted to move that money over into potentially positioning myself to buy Amazon if I could get like sub 170.
Right. Right.
to like really turn Amazon into a substantial position in the portfolio. And that's where I wanted to get the money, was from that neo put. I just thought it'd be the most responsible thing I could possibly ever do with the portfolio.
So guys, we're seeing our first sense of weakness after JPOW Speaks. S&P basically up 0.5%. It was up almost 1.2%. So now this is the test at 10:49 a.m. This is the test. Does the market rebound from this like little mini dump we got, or do we keep heading lower? For us as put sellers, it's actually bullish, because if we want to sell some puts, we have a little bit more volatility we can take advantage of right now.
Absolutely. So let's keep it going, dude. We have other stuff that we can cover. Let's talk about this one right here. Your little Dolo trade, Amit.
Yeah, so let's do the backstory on this. So the backstory on this was last week, I think it was on this show, TJ was like, hey, what about Snowflake? Let's look at Snowflake. We didn't do anything with Snowflake, but we knew they had earnings coming up. Then on Wednesday, I texted him. I'm like, well, 115 put, it's already down 30%, not looking horrible. You said, 115 premium's not that good. Let's do 118. I was like, all right. And both of us were wrong, because 115, 118, the sucker went to 113 at one point. So.
Yeah, but we would be in the clear if we would have done the Amit approach at 115. So over here, we're typically struggling over here with TJ style.
Well, even if we did 115, the thing is at 115.50. So would we be that much in the clear on my approach?
Well,
it would be better, but
we're out of the money versus in the money.
But we are out of the money.
And then put Sam's comment here.
You guys are
talking Sam, I am green eggs and ham. Put his comment on there. I fucking watch Sam. All the respect in the world for Sam. He knows this space. Sam, I still don't know what the fuck Snowflake does, bro. And I listened to you closely 3 times over on 1.5 speed, on 0.25 speed if I could. I don't understand the value proposition of Snowflake. Like,
so
I don't understand the value proposition. I think they'll make money. I mean, they obviously do something that's kind of important. If not, people wouldn't be giving them that kind of money to be their customer.
No, I understand the value proposition. It's a very sticky platform. The problem is the communication. This is the reason the logic on the puts was the thing is down 30% year to date. It was down 30%. Did we think it was going to go down another 15%? They sell ice cream. That's hilarious. But the reason they went down 15% genuinely, I think, is because management sucks. And they
but let's talk about it and forget about the fact that we're both Palantards, right? You way more than I am. Bro, the numbers were pretty good, dude. I literally spent about 20 minutes of my time. I put on Stock Analysis. It's a website that I subscribe to. I put it on Visual Stocks and Alpha Spread. Those are my 3 little go-tos to do a little bit of due diligence. And I mean, dude, what does the market want from this company right now? I mean, I'm just saying, dude, they pretty much hit on every metric that they aspired for. I mean, were they really that bad, or do I just not know how to read numbers anymore?
No. The earnings were not bad, and that's the thing. Like, that's why on the calls, even Sam was confused. Sam has known Snowflake for a long time. It was not a bad earnings. It was good numbers. NDR is up. Now the stock-based compensation is disgusting. They're not profitable. You can see the bad numbers as Palantir bulls. I point out all the bad stuff, but does it deserve to be down 50% year to date? I don't know, and that's why going into earnings, it didn't feel like it deserved to even be down 30%. But at this point, now that it lost 120, I was talking with a couple of people that are in the data science space and they understand Snowflake and the sort of unique nature of its scale. They think it goes below 170 and 80. This is kind of what you were saying to me last week. You were saying below 100, you establish a multi-6-figure position. Those are some of the people I talked to yesterday.
And there's a comment that says, I don't understand the value prop, and I think that they'll make money. That's just it. I don't understand the company, but I think the company is going to succeed. It's just not in my sphere of competence, guys.
Correct.
It is not in my sphere, can't even say the word, sphere of competence. Like, I know a lot more about fucking Neo than I do Snowflake. And that pains me to say, because I've invested so much time trying to understand battery swaps and how Neo is going to eventually, hopefully, get to the profitable promised land if they aren't flat out lying about their numbers and so on and so forth. But I have not invested the time to understand Snowflake, because there's something that doesn't exist there for me, and that is in interest. I'm not in the space, but I rely on the Sams of the world that understand this space at a much higher level than I ever aspire to get to. You know what I mean? And that's just the reality. You lean on other people. I mean, that's this, like, they call it cheating in school, or in investing, it's called being kind of smart about it.
Yeah, and well, here's the thing. Even if you don't understand anything about Snowflake, this is for anybody, their RPO went up 48%. And all that means is the remaining their backlog is about $5 billion of revenue that's about to come into recognized revenue on their quarterly results. So their numbers are only going to go up, even if it doesn't go up as much as like Nvidia or something like that. But the communication from management is what I think is hurting the stock. So what do we do, TJ? You want to roll these? How are you thinking of playing
I
this
don't
out?
think there's anything to do because you just look at the intrinsic versus the extrinsic value. We're sitting at whatever that math is, 115 from 118. That's our intrinsic value, and then the difference is going to be our extrinsic. So there's no risk of early assignment right here. So I think we just milk the theta, play for a bounce, and then maybe the option corrects itself. If not, then we have to correct it by rolling, improving our positions. And maybe we try to go all the way to 115 because that would be a play since it's a very small position. The one thing that was good about this trade is we didn't go very heavy. So
Right.
I'd be comfortable owning it at 115 and then learning about the company, selling some covered calls, getting paid to learn, right? So because then now I'd be legitimately interested in it because there's skin in the game, so to speak.
Well, let me ask you this question. I think that makes a lot of sense. When you say roll down, can you explain the logic why if we roll down, we get paid more of a premium? Like, why do we get paid to roll down?
Because you're adding time to the clock. So you're paying for that. You're getting compensated for tying up your money for that much longer. So theoretically, as long as you haven't, the stock hasn't like totally tanked below your strike price.
Right.
You're saying, hey, I've got this amount of capital here. It's like 50 or 60 grand, whatever it is, right? 11,800 times 5. That's our collateral. So we're going to take that and be like, hey, this is the agreement that we made to buy these shares next Friday because this expires on 8/30, I believe. So if we go here and we're like, hey, how much would you pay us?
Because I think this is important because for people that have a put and then sometimes it goes lower than their strike, but not super low.
Right.
This is what we did with Robinhood from 2150 to 20, right?
So what would you pay us, Mr. Market, for us to admit that we screwed the pooch? Let's just call it what it is. We screwed the pooch. We picked the strike price that was a little bit of aggressive, and Mr. Market showed us who's large and in charge. How much would you give us to add, another 30 days to the clock, right? Going from 8/30 to 9/27, roughly about 30 days, 29, 30 days, because we've got to cover the 448. If we want to take our ball and go home and free up the collateral, even though they paid us a little bit of money, we got to give them 445 a share to free up our capital because we're losing this trade, right?
Right.
So in order to turn a loser into a potential winner, you can kind of recalibrate, reassess the situation, cause to pause, take a step back and be like, well, let me just add more time to the clock, but I don't want it over here at 118. They'll pay you $13.25 for doing that. I want to improve my strike price. And what if I go to 115? I can still get $640, $625 for taking risk off the table because now instead of tying up 11,800 a contract, we're only tying up 11,500 a contract by reducing our strike price by $3. And this gives us a more favorable entry point. And you're like, okay, my hand is really forced, and at some point I do have to take ownership of these shares. Hell, I'd rather buy them at 115 than at 118.
So this is the magic of rolling, right? So if we just stay on the screen right here, basically you sell a put on a stock at 118. The stock has earnings. Earnings is good, but the market doesn't like it too much. Goes to 114. You're not in expiration yet, but you have the potential to say, hey, I kind of like the stock. I don't love it at 118. I would like it at 115. You can free up some of your collateral because now you're doing 115 a share versus 118. Right. And you can get paid to extend the time on the runway of the contract in order for you to ultimately get out of the deal, not get assigned, have a higher likelihood of not getting assigned because we went down from 118 to 115, and pick up more premium. The only way this goes wrong is if the stock tanks like 20% below your strike, because then there's no premium to collect.
Correct. Or you'll have to just do a lateral roll where we can just go from 118 to 118 and probably make money, just extending the contract that way. But make no mistake about it, guys, the risk profile is the same as owning the shares. Like the people that own the shares already and they're down 15%, whatever it tanked after earnings. I don't exactly know what the number was. they're down too. We have the same risk profile because we have a commitment to buy.
Right.
The difference is we at least agreed to buy below where it was trading at the time.
Which is
So
actually
we're already in a better spot.
But that's
We're
a cheat
already-
code. That's a cheat code, right? Like that.
Yeah.
That's a really unique. Like to say you were going to buy it at this level and then see it go down and then say, actually, we'll buy it at this level and then not have to buy it at all because it never got to that level.
In layman's terms, we got paid to buy the dip, and now we're trying to get paid to buy a bigger dip.
Right.
In layman's terms, right? Whereas people that have been holding the whole time, not selling covered calls or anything, they're just going down with this thing. They're going down with the Titanic, and they didn't get on the lifeboat, and life kind of sucks for them right now because they don't know when it's going to rebound. And then the only thing that they know how to do is, should I buy the dip? Should I average down? And it's a tough road to hold. God bless you, but it's a tough way to make money when the company, like, we don't know when their path to profitability is. I didn't listen to all the conference call. I couldn't because it fucking sucked. It was boring, right? So if I can tell you one thing that sucked about earnings was the call. It was very uninspiring, to say the least, in my opinion. And I'm like, okay, it didn't really get me that excited to want to go fight, win, snowflake, take ownership of the shares. Maybe they need a little more pep rally type situation around the stock.
Yeah, and to sum it up on Snowflake, and then let's move on to Amazon. This is the reason why I love selling cash card puts to get into a position, because you're getting paid to get into it. And if you mess up on the entry price, which is the whole point of a cash card put, most people will mess up on the entry because most people aren't the best at picking the bottom, including myself. That allows you to get compensated to at least try to get a better entry price.
Yeah. It's a margin of safety, guys. It's a margin of safety where I can't just look at the chart. You have this one guy that comes on, and that dude knows technicals at a whole other level, right? I think he goes by paper gains on.
Yep.
And this guy can look at trends and all this other shit. Because the chart tells you essentially the story of the stock, right? Like the stock's kind of emulating what the hell they're telling you over here on the earnings report and everything else fundamentally. And he can look at those charts and pick a much better entry point than me. Whereas I'm like, okay, I'm not that good at that. But if I sell enough cash secured puts, I can artificially manufacture a good entry point, if you will.
Right. And that's the best we could hope for, to artificially manufacture an amazing entry point, even if you can't read the charts, which is, easier than reading the charts.
Yeah, because I always tell people technical analysis is great to tell you when it rained. It's not necessarily good at telling you when it's going to rain.
Right.
Because it was that fucking good, they wouldn't be on YouTube. They'd be billionaires already. So shut the fuck up. It's not that easy either. So stop lying. You know what I'm saying? I can call a spade because I've been there, done that. I've invested way more hours of my life trying to understand these charts. They're real good at telling you when it rained, but it's past tense, bro. Not necessarily indicative of what's going to happen in the future. It's not a crystal ball.
Yep.
It's just not a crystal ball. It's just establish some trends and stuff, give you a high likelihood, but that doesn't mean that it's going to happen. News can move the market. Politics can move the market faster than anything else, like a fucking little squiggly trend line. So that's just no bueno in the long run. I'm fundamentals over technicals all day, twice on Sundays, even though the market's closed. Which other one do you want to look at? You want to look and see what I did with Amazon?
Yeah. What do we got going on with Amazon?
So I got more serious about Amazon. I just looked at the portfolio, and it's embarrassing to have way more NEO than Amazon. So now we're sitting on 1,000 shares at 168.96 strike. And I've got these for sale in the distance at 175 and 185, just as a hedge to the downside. I fully expect these to be under pressure, and that's a good thing, but I'll keep rolling these things for the next 3 to 5 years. I am hoping for a pullback, though, Amit, because I would like to get more shares, but I don't want to pay more than this price for them right there.
168 is your average.
Yeah, I don't want to go. In other words, I'm not willing to average up. So if Amazon won't give me that price, then this is as big as this position is going to get.
Well, September tends to be volatile, so maybe that's the month where the cash ends up being deployed.
Well, usually August is a pretty shitty month, right? And then September doesn't usually fare too well. But I think historically, if you look at election years, that's not always true.
Yeah.
No, again, I'm not Cleo, the lady who predicts all this stuff, and she got in trouble. I don't know. I don't know what's going to happen, but I'm telling you, that's my number right there. That's the number. You give me that number, double the position, don't even think about it. Ultimately, I think Amazon's going up and to the right. That's what I'm willing to pay for it.
Right.
And selling cash secured puts doesn't even make a whole lot of sense either, because the premiums aren't that good. So this is more of a portfolio stabilizer play. And capital appreciation play. There's not a lot of premiums in Amazon, and typically there isn't on that high caliber of a company, Amit, because one, the volatility is typically just not going to be there, and it's like the risk is usually commensurate with the reward, right? So there's not a lot of risk here with Amazon. Amazon ain't going to zero, bro. This isn't a Mad Money funny situation. Amazon probably going to go to 300 before it goes to 150. You know what I mean? Like, there's not a lot of risk to the downside here on Amazon either. It's actually priced pretty competitively in comparison to its peers in the Mag 7.
Yeah, outside of Google, it's the cheapest Mag 7. So the question's just if we get a chance to get in 150 again. Like August 5th, dude, I really feel like it's going to be a generational dip when we look back on it.
Yeah.
Because we might not get it again.
So what do you think about the pivot in the portfolio? Do you think it's good to try to make Amazon one of the pillars?
Yeah, no, I think that makes a lot of sense. I think Amazon at the top with Tesla, Palantir, and PayPal is a no-brainer, and with SoFi, and I think that's a good fifth position if it ends up getting there over time.
Yeah, I agree. So another one that we have here is, let's talk about one that did pretty well for us already, and that is BITX.
Yeah. So this is a 2x leverage Bitcoin fund that we have.
So I'm bullish on Bitcoin. I think, I studied the rainbow chart, is what they call it. And I think it's ultimately going to go up and to the right. I mean, this is already proven. Bitcoin's been one of the best investments probably for like the last 15 years. I think it just had its 15-year anniversary recently.
Yep.
So we picked up 2,000 shares of this leverage play at 26.54. So we're already doing pretty good on the shares themselves. And then we're running essentially a coverage strangle. We've got more cash secured puts on this January of 2025 at $24. And we've also put those shares for sale at $32 January 2025. So a nice little sweet spot for us when the time runs off the clock would be kind of like right where it's at. So if it just goes sideways, which is very unlikely for Bitcoin, but let's just say it goes sideways for the next 4 or 5 months, we're going to win both of these trades. And then we can do it all over again. And then we're also sitting on some pretty decent capital appreciation. So it's been pretty fun so far. I like it, dude. I especially like this one here. This trade, ever since we put it on, shout out to Adam. Adam's the gentleman who gave you this trade, right?
Yep, he is.
Dude, this trade has not caused any stress. The only time I ever look at this thing is when we're on your channel.
I mean, look at this. We collected $800 a contract off $2,400 in collateral. That's basically 35% on our money. Now, again, this is leveraged. We were talking about leveraged ETFs, single stock ETFs on the show the other day. This is a leveraged Bitcoin ETF. But if you believe it's above 60 in the next 4 months, we just collected 40% on our money in 5 months. So call it 6% a month, which is not bad at all.
Yeah. Yep. So I like it. You want to add to it? Or are you just good right here?
I mean, so the time to add to this is when BITX is
like 57.
Yeah,
I hear you.
I added to my own personal position on it 2 days ago when we saw Bitcoin at 58, and I got paid like 730 of premium. But I think if we get a little weakness, because 705, we know we can get 750 of premium.
So let me add one that is compelling.
Okay, what are you thinking? I think
this is one that is tied to our beloved Tesla, or my beloved Tesla. It's my favorite stock in the market. It's not SoFi, guys. It's Tesla. By far and away, it's Tesla. I think Tesla's a little mini ETF. Some people think that's cringe to say, but show me another company that has that many verticals that potentially could work out. I don't.
Tesla is absolutely a mini ETF, dude. 1,000%, 100%.
So TSO is a leverage play on Tesla. As goes Tesla, as goes this thing 2 times over, right? So I've got something cooking here on this one where I bought long calls at 573 for January of 2026 and paid a pretty good chunk of money, 48,500, already up 26% on those. And I just did this on 8/9. And then I'm running the poor man covered call strategy on it by selling covered calls against those quote unquote virtual shares, because you control the shares when you buy the long call.
Right.
So Robinhood, for that reason, Robinhood will, and any brokerage for the most part, depending on what level you have on your options trading, they'll allow you to sell covered calls against those shares because they know that you can make good if you need to get exercised. Like if I had to deliver these shares over here, they know that I've already got a contract that says I want to buy the shares anyway. You follow me?
Right.
So I've already collected some premiums over here by agreeing to sell these shares at $11.50. They're obviously out of the money. And you can see here that that part's going pretty well. So the reason this is a very compelling strategy, guys, because it's a heck of a lot cheaper to make a commitment to buy, in this case, 10,000 shares of TSLL versus buying the shares outright. You can typically get this done for about 35 to 45% of the capital required to buy the shares outright. And you can have, similar deltas, not the exact same as owning the shares, because owning shares is 100 delta. So over here, whenever you buy in the money, I usually look for like an 80 delta. So for every movement up or down, I'm only getting 80% of the value versus 100% of the value of the move whenever you own the shares outright.
So you're saying
the premium is the exact same on the covered call site.
So you're saying the benefit to doing this is instead of buying 1,000 shares or 10,000 shares and then selling the covered calls against it, you can buy 100 leaps for 40% less of the cost, which means you just save less money on the trade, but the premiums are the same.
Right, because we can look at it. So if you want to buy 10,000 shares, it's going to be 90 grand, right? 99 grand, whatever that is. And here we have these. Here it's going to tell you what the value is, 59,000. So it's about 60% right now because I got them when it was a better deal, right? Because I paid 485. They're currently worth 593.
Right. Yeah.
So what do you think about that position? I mean, I like it from two standpoints. One, we can just add more leaps. We don't have to do them at 573. We could do them higher so they don't cost as much. A. B, we can look to buy shares outright and play Tesla up for the robo taxi and sell cover calls against it. Or C, we can just sell a shitload of cash secured puts in the $8 range, and that's probably going to pay a pretty good premium as well. So I feel like we have some options with this particular ticker, and it's made us some pretty good money here on this project thus far.
Yeah. So let's think about it. So we just freed up 200 grand in collateral. So we have 200 grand to play with. This is leveraged on Tesla. I am bullish on Tesla, and we have a robotaxi event coming up. We have rate cuts coming up. And I mean, the bear case for Tesla is that they don't figure out FSD next year, and then everything takes a shit when it comes to Tesla, and everyone was wrong. So if we're wrong on Tesla next year, everyone was wrong. It's not going to be an isolated thing here. I like that. I think why don't we do a strangle on it? Why don't we do calls and puts at a certain price going into 1010?
So we have, I think the first thing we can look to do is, let me just go here. So let's just start with cash secured puts, see how those look. And we want to do, when's the event? So I think we play, I don't know, hear me out. I think it makes sense to play right here because that's going to be right before we get confirmation of the rate cuts. Isn't the meeting on September the 18th, I believe?
Yes, correct. That's a good idea. Yep.
So do you want to do something here and then we'll have more confirmation, then we can set up the next one for the robotaxi event, which I believe is in October unless they postpone again?
Dude, if they postpone again. Right?
Yeah, but I'm just saying that we're going to be over here in the sixes, right? Which would be great. So, but I'm just saying it's not going to be a good look for Tesla if that happens, right? Because I don't even know they really had a reason to postpone the first time, aside from they just don't really have shit to do, and it might have been a media play that got a little out of control, and now they're scrambling. But I don't know. I mean, I don't work there.
Yeah, I think September 13th is good. This is good.
So what are you thinking? 850 looks good. What can you do the math on that? We're getting $30 on 850. Is that good or not good? It's 21 days.
That's 3.5% on 21 days, which is 1% a week.
Bro. That's a good one. Yeah,
that's a good one. Yep.
Yeah.
No, I wish Robinhood would tell you the percentage return.
Talk to your boy Vlad, bro. Talk to your boy Vlad. What do you think? 200 contracts? That's fun.
That's what? How many shares is that? 2,000?
20,000.
20,000. Sorry, 20,000. Yeah, let's do it.
We can try to get 31. This is why this thing's so sexy, bro. Where are you gonna tie up legally? You know what I'm saying? I would do it like we just gotta hit submit. Hopefully we can get it filled. So the other thing that we can look to do is we're flat out bullish on it. We can buy shares, sell covered calls, bring more money through the door if we think that it goes up and to the right from here.
Yeah, I agree. So we just tied up 170 to collect. Hopefully,
yeah, but it's not gonna fill though. Hold on.
You want to replace it to 30 cents? Yeah. So hopefully collect about 6,000, which is not too bad.
I'm hoping I should have just done it there, dude. I don't know why I didn't do it there because I knew that that's what it was going to be. But, fucker. Well, we'll have to wait. We'll see what happens. We needed to come back down to $10 for it to fill. But do you want to maybe buy some shares, kind of like what we did on Robinhood, and then put them up for sale and start collecting money that way?
Yeah. So on the buy side, what are we thinking? 1,000? A little bit more aggressive than that.
Shares. How much is 1,000 shares? Can't even do the math. Oh, that'd be fun.
12,000. Yeah, 10 grand.
Yeah, dude, that's not even going to look at it. I'm not even going to look at it. So
5,000.
Yeah, I think that's cool. That's more exciting.
All right, there you go.
The other one might fill though. It's come down a little bit. There we go. So we got 10.03 on those guys.
Okay, so now we got to sell calls on those guys and collect our rent, as you say.
Man, look at this spread here. This thing's all retarded right now. We'll see what happens. Well, we got a little bit of show left. Well, hopefully we get this one filled. So then now we got to go find our little position here. Where is she at? She's not even on the books yet. Let's see.
Guys, again, if you have tickers, we'll spend the last 15 minutes of the show going through some new tickers, and I'll kind of pitch them to TJ and see what he thinks as well.
So we go Tesla. Do you want to play these all the way for the October event, or do you want to manage these for September the 13th?
Yeah, I mean, I think let's collect the most premium, because if we lose the shares, we don't give a shit about this position at all.
Yeah, so then and with that in mind, then we can collect the most dollar amount, not necessarily percentage amount, but dollar amount.
Correct.
When is it? 8/8 or 10/8?
It's 10/10, so October 18th is the right day.
So right here.
Yeah.
And then I don't know, you want to do 14, 15? How much capital?
We bought it at 10, so
sell it at 15. That's pretty solid.
That'd be a $5 difference. We get paid basically $5.30 a share with the premium. Yeah, I don't think that's horrible.
Yeah, and then it's 50 contracts. It's a huge ass spread though.
So 50 contracts, that would be 1,500 plus 50 times 5, or 5,000 times 5.
Try to get at least 38. I wonder if it's one of those where you got to go to, well, maybe. We can probably get it filled right here. Easy. Might have been able to get a little more.
Yeah.
There we go. So we get a little rebate.
So we just agreed to sell the shares at 15 after the 8/8 event or 10/10 event. And if Tesla pumps, we'll probably lose those shares, but we'll collect a good profit.
And then here we still can't do anything. So we're probably gonna have to go all the way to 28, but we'll do that later. Let's keep it going, and we'll get this one on the books. It just might not be at 30 cents, but we'll just let it stew for a little bit. Anything else that we have? We do have something else that I want to talk to you about. Got some squatters here, Mitt. We got some squatters here.
We got some squat, but they're not squat. They're not. They're earning their keep. Well, how much are we up?
Yeah, but it's unrealized gains, bro. This channel's about realized gains. Realized gains are greater than or equal to unrealized gains. In fact, there's no equal to. They're greater than. So I like realized gains. So this is beautiful. But if it goes back down, we lost all those gains. We didn't lock anything in. You know what I mean? So that's
okay, let's look at the covered calls. I'm still against it because I think Hood's going to run. But, I mean, if we lose those shares, then whatever, right? We lose those shares.
Well, but we can always defend those shares, right?
We can always defend it.
We're making an agreement to sell them. We don't have to sell them. We can roll it and play the stock from behind. Again, you say you think it's going to run to what?
Well, 25 is my target. But, again, it's going to be volatile because September election, like, it's a little tough to see how quick. I don't know when it's going to happen. I think it'll happen by the end of the year, though. But it's green today, so I think 22 covered calls. Let's see what the strike is there, or 23.
Yeah, so can we really afford to leave that kind of money on the table? Just like $2,000. I just don't. I think the answer is no. I'm like, I think it's going to run to 25. So just because of that, I'm not going to collect $2,000.
Well, yeah, for me, it's just I understand the company so well, and I don't know when it's going to happen, but I don't want to get caught not getting the share appreciation. But I see your point, obviously. You know.
Yes, and you do that 2 or 3, 4 or 5 times. It's kind of like you agree to sell them at 25 at that point.
Right.
Those are the gimmies and the gotchas. Then again, it's easy for me because I have zero emotional attachment to these shares.
Yeah. Yeah.
And I think that that's the big key to this whole thing. The people that struggle the most with covered calls is because they're married to these fucking shares. And that's cool. And there's nothing wrong with that, except you're not going to be able to play the math like someone like me who's like, would they take these shares away from me at 22 because I'm on vacation and I'm not paying attention or whatever? I'm not even going to be angry about it because I was never in this position to begin with. And all I've done is make money with it.
Right.
So it's kind of like, whatever, I'll just go find another player, go sell some more puts on Hood and call it good.
So based on the 42-cent premium, essentially we're agreeing to sell it at $22.42. That's kind of the adjusted cost.
Correct.
All right, let's do it. Let's sell some calls. Collect some rent from the squatter. So this is 5,000 shares of Hood, 50 contracts on the covered call. We'll see if that fills, but that's about $2,000 of premium if it goes by September 13th to $22.
Right. So then the other one that I wanted to talk to you about is, so we have a squatter on Hood Avenue, and then we also got squatters on NVIDIA Lane over here. So these are like pieces of real estate. So I attach addresses to them. Why do I do that? It's a psychological thing, because I would never fucking buy a rental house and not put a renter in there.
Right.
I just wouldn't do it because I played that game in real estate. And it's just, to me, that's just retard mode to the nth degree. Oh, let me go buy a rental house, but I'm not going to put renter in there because I'm only going to play the capital appreciation. Nobody does that in real estate, bro. Nobody.
Yeah.
Because, there's levels of stupid, but they're not that stupid in real estate. So I don't like being that stupid in the stock market. But here we have NVIDIA Lane and fucking bought and paid for house. There's squatters hanging out in New York right now. Like, there's nothing going on here but the rent.
By the way, real quick before we keep going, guys, market reversed back to the green side. So we saw that downside momentum at 558. Now we're at 561 on the S&P. So back to green.
So let's talk about this position a minute.
So I think it's going into earnings.
At 132, bro. We knew we were buying them at the top, but we're like, it's NVIDIA. Let's start a position. And then this shit went all the way under $100 at one point, right? So we've kind of been like playing from behind on the shares, but then I was able to average down a little bit, and boom, we're sitting at 125. So we're finally winning on the actual shares. We don't have anything else on it right now. We've made money on cash secured puts. We've made money on 2 rounds of covered calls before as well, right? So remember, we had these for sale like 140 initially when we had bought the 300 shares at 132.
Yeah.
So this has been a very profitable campaign for us. But the one thing is, this is where this is different now, because we recently had a binary event with Robinhood called earnings. But now NVIDIA has their binary event coming up, right?
Yeah, on 8/28. Yep.
So I am okay with squatters here and letting the data come in, or we can gamble and use the volatility of the earnings. So I'm sure the premiums are going to be off the chain.
Well,
right
so
now.
let's see, going into earnings, what the covered call premiums are. Because my assumption is I'm bullish NVIDIA. I think it does really well. We get the share appreciation. If it's like a Robinhood where we don't care if the 500 shares get sold off.
I really don't here either.
Okay, so let's pick a good strike that we're comfortable with and let's sell it. I mean,
so, and the earnings are 828, so 830 would be good. We'd be good there, right?
Yeah, next week. Yeah.
So what are you thinking? 135? I mean, I think this thing can go to 140, bro. Do you?
I think it goes to 140 and beyond. So the question then is, are we okay with a $15 spread on 500 shares at 140?
It's a lot of money, isn't it? What is that? How much money is that?
It's $15. 7,500. Yeah, but it's basically selling it at 143 if we get it filled at 143. Yeah, I mean, look, it's just, if it goes
to all these crackheads, dude, there's 50,000 of these guys over here. So this is, I mean, dude, it's like the cops know that everybody's on the street corner dealing drugs and they ain't doing anything about it. And it's at 30 Delta, so this is very aggressive.
Well, so here's the thing. If it goes to 150, how do you care?
I'd look at rolling a month out and going from 140 to 142, and I'd play that game that way. I have less than zero emotional attachment to these shares. I don't have to be part of NVIDIA gang. It never was before. All we've done is make money with the stock, and I'm cool with moving the money to something that I am a little more invested in emotionally now and psychologically and just mentally and intellectually, because I've been studying the stock a lot more, and that's Hood.
Yeah.
I'd rather have this money in Hood because I see Hood as a company that I want to be in for the next 5 to 10 years. Whereas NVIDIA, I think they have 2 years of glory ahead of them, maybe 3 at the most. Then the reality check kicks in.
All right, let's sell it then. Because I'm not emotionally attached to it either. I really don't care if we lose the shares.
Yeah, I mean, emotionally attached to collecting premium. Because premium pays for wise purses and alcohol and dinner and trips to Vegas and oh shit, man.
Yeah, I think if we had a massive NVIDIA position and we like Tesla, like for Tesla, it's different because you want Tesla to be a staple of your portfolio for the next 10 years.
Yeah. And then a lot of it has to do with the level of due diligence, because I saw the episode where you chimed in on Tanner's channel, and I could tell that dude, if NVIDIA was a woman, he'd buy a ring for her.
Yeah. Yeah.
But he's probably invested that level of due diligence, and it's probably done that well for him financially. He can't envision a world or a life without NVIDIA in it.
Yeah.
Whereas with me, it was like a side chick. It was fun for a night. You know what I'm saying? I don't even have her number. I don't know if I ever see her again.
Barely know her name. Oh,
yeah. So I was like, it was fine. You know what I'm saying? I got a nice little story to tell next time I'm in Vegas. But it's one of those, what happens in Vegas stays in Vegas for me. And again, that's the biggest difference with doing this. The way that I do it is I usually don't have a lot of emotional attachment to the shares anymore, because that's really cost me a lot of money over the years, having that emotional attachment versus just playing a game of math, treating it like a piece of virtual real estate. I wouldn't be thinking twice. I would have already sold these calls and called it good.
All right, let's do it right now. Let's do it. Actually, it's good we didn't do it last week, because last week NVIDIA was at 110. We wouldn't have got paid the premium that we're getting.
Yeah, so it paid to wait, right?
It definitely paid to wait. Yeah. All right, so we're selling 5 covered calls. We're going to try to do what, 325?
Yeah, see if we can get it done in the middle. We've had a whole lot of luck with that today.
$1,600 we're collecting in premium.
Hey, this one worked. Yay, we're in business.
Okay, did the other ones get filled yet or no?
One of them did.
What was the one we did? It was covered
Hood.
calls, right?
Was it Hood?
I think it was Hood calls, yeah.
Let me refresh the route here.
And then we'll check out SoFi after this, guys.
By the way, dude, I've been watching your channel a lot more the last few days, dude. You're doing really, really well on this Palantir coverage.
Well, the stock's doing really well too, so that's helping.
Talk to me about there was something I just couldn't quite understand it, dude, because I was actually grabbing a workout, even though the dentist told me not to. I don't know if I'm talking funny or not, but I just had an implant done on Tuesday. So the dentist said that I might sound a little bit weird. They put a fucking screw in my mouth, bro. It's crazy.
That's what happens, dude. I had 3 root canals last year. It happens.
And then I'm waiting on them to do a fake crown or whatever, temporary crown, and then they'll do like the more permanent crown after it scars up or some shit. I don't know.
Yeah,
not fun. But I was grabbing a workout and I heard you talking about that Palantir had hired some fucking badass or something, and there was something about China. You were in the background, and I was like grabbing a workout that I wasn't even supposed to be grabbing. So, do you know what I'm talking about?
It's essentially, dude, like I think Palantir is making the right moves. They're realizing all the people that are going to help them get more deals, all the people that are mutually aligned with their values, and they're giving them money to be consultants for them. And it's just more, it's like Google does this, like all these guys do this with these big companies, right? So it's just it's just a question of, Palantir getting their lane to be able to do it. And I think Gallagher is bullish.
So I think we finally might have gotten it filled over here.
So we got Hood filled, and then TSLL, we got 44 out of 200 filled.
Yeah, so we'll leave it alone, dude. If not, it's just not meant to be, and we'll move to something else. So Hood, where's Hood? We did something. Here we go. We put some squatters on Hood Avenue, or we put renters in there. No more squatters. We agreed to sell those shares at $22, collected 42 cents. Now the market, of course, is saying 44 cents. And guys, this is a legitimate gripe with Robinhood that a lot of this is the main reason that a lot of professional traders, if you will not touch Robinhood, because they're absolutely convinced that you get really, really bad fills. I don't think that's really the case for me, I just think that I'm very impatient kind of on purpose because I trade mostly live. So I'm trying to get the contract filled while I'm on the channel, if that makes sense.
Yeah.
Whereas in like my real life and I'm doing these offline, I'll place the trade at 10 o'clock and then I'll get a notification at 2 o'clock that I got my price.
Right. It's about patience when it comes to this. You're right. 100%.
Yeah. So this is a lot. Like, well, that's not good for TV, if that makes sense. So just giving y'all like all the disclosures, because it really does bother me when people talk shit about the platform when I'm like, dude, the only reason I get shitty feels is because I'm trying to keep the stream moving.
Right. Right.
And I have a goal of collecting a certain amount of premiums per day and all this other stuff. So I don't have time to sit there and, keep looking at it. And before you know it, I have a 6-hour show and I got 2 viewers,
Right.
So just calling a spade, right?
Before we go to SoFi, can you answer this question, TJ? When you sell calls, aren't you bearish?
No, you're neutral to bearish. You're neutral to bearish. You because it's okay if it goes up. You just don't want it to go up too much.
Yeah.
But in my case, I'm okay if it shoots up and I'll just keep rolling and increasing my strike price and the amount of capital appreciation that I'm qualified for, because I don't have to sell the initial rip. I'll reserve the right to sell whenever I'm good and ready.
Right.
So it's just my mindset's just a lot different, guys, than that. Like I feel like that's where a little immaturity shows for people that are in the stock market. We're like, oh, you're capping your upside. And I'm like, so you mean to tell me you know exactly when that top's going to be and you're ready to hit the sell button? So it tells me a couple of things. One, you haven't been in the game long enough. And 2, you're not really long that stock because you want to reserve the right to sell those shares immediately that it hit your price target. Whereas when I'm like legit long, like a company like Tesla or SoFi or Palantir or PayPal, for instance, there's not really.
Oh, we lost TJ. He'll probably be back in a second. There he is. S&P guys at 561.
I hit something. Sorry, guys.
You were so passionate. That was good.
No, what I'm saying is there's not a price that some of these stocks can go to that makes me want to sell right now. So if I'm like scrambling with this covered call for the next 2 or 3 years, it's really not that big of a deal to me.
Yeah.
But that's just,
I also think selling calls is a way to hedge. Like if you think a stock is going to go up long term, but it's not going to go up over the next couple of weeks, you can get some premium. And then if it goes down, your adjusted cost basis went down. So the call gave you a hedge against downside volatility.
Yeah.
Wow. Sure. IWM over 3%. Not bad. Small caps having a good day.
Yeah. Agreed.
Okay. So let's look at SoFi. So you sold $7 calls on SoFi. SoFi is now above 7. So this is exactly the situation we were just talking about, navigating this position. And
then this is a really good teaching segment for all of you guys. Is one, if you're really, really convinced that your stock is going to shoot up, kind of like the way that you were with Robinhood or the way that you were with NVIDIA, because I messaged you on NVIDIA offline, right?
Yep.
And I was like, hey, we got squatters on NVIDIA Avenue. What the fuck? You know what I'm saying? You're like, I think it's going to rip going into earnings. Like, let's be patient or whatever. You talked me off the ledge, and here we are. Now we got a much higher strike price, decent premiums, right? That's where we're at.
Yeah, and you talked me back onto the ledge today. So yin and yang.
Onto the ledge, and then on Hood, you're like, I think it's going to rip. And then I was like, cool, what to what? Like, what do you think it's going to go to? So I'm like, you're saying it's going to go to 25. You don't know when. Well, I'm thinking that it might not go to 22 by this day. So let's bring some money to the door. We'll scramble. And then eventually we get rid of those shares at a 24, 25 handle. We did okay.
Right.
So essentially it's just a glorified trade right now. We're not like legit long Robinhood yet on this trade. But now let's look at SoFi. SoFi is a little bit of a different situation for me because it's 150,000 shares. And there's 6 open strategies. We've got the 500 cover calls that we'll address shortly. We've got 1,000 cash secured puts at $8 for January. Another 1,000 cash secured puts at $7 for January.
Which is 100,000 shares, right?
Yes.
So theoretically, if you don't roll, like just if you didn't roll those, if SoFi is below 7, you would have to buy 200,000 shares at $7 and $8, essentially.
Correct.
Got it.
So it's a big bet, $1.5 million. And then I went degen mode, lottery leap mode, and I agreed to buy an additional, or reserve the right to buy an additional 100,000 shares at $10 January 2026. So these are leaps, long calls.
Right.
And then I also agreed to buy more shares at $7 and more shares at $5. So these are lottery leaps. These are leaps that were in the money. And I'm selling. Eventually, I want to start selling cover calls against these right here to run the poor man cover call campaign to essentially lower my break even on the tracker. It won't lower my break even here, but I want to bring some premiums through the door because the cover call premiums against these is the exact same as the premiums that I collect on the 150,000 shares. So I did a little feeler bet when this was like in the 650 range or something like that, 660 range, and I said, hey, let me just put 50,000 of these shares for sale at $7, and I think I got paid like 14 cents.
Yeah.
Yeah, 14 cents, and now it's at 56 cents. So my break even is 714. So right now it's trading at 751. If you can help me out on the math of it, it's like 36 cents.
Yep.
So that's 36 cents of capital appreciation on 50,000 shares that I'm not qualified for, which feels like about $15,000.
Yep.
So that's the gimme and the gotcha. So now what I could do is I just got to do the math. I got to look at, okay, so there's 52 cents of intrinsic value. That's how good it is for the person on the other side. So this is the Heisenberg thing. They won, right? So there's only 4 cents of time left here of theta decay of extrinsic value left on the clock for us on this option. You know, it's your theta decay plus your implied volatility. That equals your extrinsic value, textbook definition. So now we're at 3 cents. So essentially, we run the risk of waking up on Monday and not owning these 50,000 shares anymore because they could potentially get called away early before the contract expires on 8/30 because this has been a very profitable trade for the person on the other side. So now the question becomes, do I want to let it ride or do I want to look to roll? In other words, I got to admit that I was wrong and I got to add more time to the clock. Kind of like what we talked about doing on the Snowden cash secure on the what's it called? The Snowflake?
Yeah.
On the Snowflake cash secured put, you have to admit that you're wrong, add more time to the clock, see what happens there, right? Because time can be your friend when you're selling options. So that's the same situation that I'm looking at here. And
Is there any world you would let those shares just get sold? Because your adjusted cost basis is like $5 on SoFi. So you would still be in the green if you sold at 7.
Correct. The issue is I just got word from Iron Sharpens Iron on Twitter or X that I'm not sure the shares would get called away. They would actually exercise one of my long calls.
Would you message Robinhood support to see which one they would do?
Yeah, so I've already got that message out there and I haven't gotten feedback.
Okay.
So I'm hoping to go live, get permission from them because I want to get clarity on that because that's absolute bullshit if they won't give me the right to choose.
Right, because you don't want your leaps to get exercised.
No.
Yeah.
I got plenty of fucking shares. I'm telling you, I want to sell the shares here.
Yeah.
Because if I could get for sure that they're going to sell the shares, I just recently bought 400 leaps for this event.
Right.
Because I was at 600 leaps at 10, so now I'm at 1,000.
Basically to cover the shares being lost. Yeah, gotcha.
Well, yeah, to still maintain the exposure to the upside. So
right.
Essentially, I'm just transferring calls or shares to long calls. But if I can't get clarity or the answer is not what I want, then I already had it in my journal when I sold these calls that I was going to roll over here and I was going to try to put a 9 handle on there and I was hoping to break even. And this is where we're at. It would cost me $500 to essentially go from a 7 strike to a 9 strike and kick the can down the road to January, and I'll just be kicking this can down the road for the next 3 to 5 years.
See, again, this is why rolling is a superpower, dude. Because not every trade goes perfect, but the ability to navigate it, that's what makes you survive in the options market, I feel.
Yeah.
And for 500, so that $500, you still keep the 14,000 of credit. So you would give away 500 out of the 14,000. And gotcha. So that would still be.
They didn't pay 14 grand. They paid 14 cents
times
on 50,000 shares. I pull it up right here.
I'll just do the math. 50,000 times.
It was like seven. It felt like 7 grand, dude.
7 grand, right? So you would still have 6,500 of net credit if you give back 5.
I'll tell you right here. Yeah, it was 7 grand. Yeah.
Gotcha.
So I'd essentially have about 6,500, right? Is that what you said?
Yeah, if you give back 500, which is still, but that's still amazing, dude, right? Like you took a risk. It went a little against you. $9 is still aggressive on SoFi, even though you and I think it should be closer to 10 or 12, but still, like the price action getting to 9 is tough. You only have to give back less than 10% of what you got to extend the strike, which is not a bad deal at all.
So this is higher level wheeling here, guys. This is wheeling 201 and 301. I normally don't like to do this on the channel because I'll bore you all to death. I mean, probably boring y'all now. Here's the issue. The reason that I sold this, it was, to me, in my mind, it was the equivalent of buying puts. This was literally a hedge. If I buy puts, I'm for sure out that money. If I sell an aggressive covered call and I get away with it, there's a chance that I might not be out that money, but they literally serve the same purpose for me.
So I've never heard that. So your argument is selling an aggressive covered call and being able to navigate the roll is better than buying a put, because if you buy a put, you lose that premium if the stock goes against you.
Right.
But if you sell a covered call, you at least are.
Well, it is not that the stock goes against you. The stock actually went in your favor because your long position printed, but that insurance went up in smoke. Whereas here, it's like, I'm not just going to sacrifice that premium that I paid for the put. The long put is a sacrificial lamb. Where here, this is a different way for me to play it. Same risk profile from the standpoint, but now I reserve the right to protect my premium, and now I'm still qualified for more capital appreciation all the way to $9, and I can keep playing this game over and over and over again. That's why I only did it on a real small lot of the position.
Right.
Because if I would have bought puts, I would have probably looked at buying maybe 50 puts at the most.
Basically, your
put print. Cool. If they didn't, cool. I'm happy either way because now I got the capital appreciation. So that's kind of the same situation that I'm in here right now. Because, dude, it wasn't that long ago that I was down $150,000 in this position, right?
Basically, you're very stubborn and you don't want to pay any money. You want to get paid no matter what.
Dude, I am in the premium collection business.
Yeah.
With the side of capital appreciation.
Have you ever bought puts on any? I feel like you don't do that.
I don't like it, dude. It's just counter to how I'm wired, bro. I got 2 of these guys. For a reason. I mean, there's no fucking bears here. It's the Bulls versus the Bulls, baby. The fucking Bulls versus the Bears. Fuck your Bears. This is the Bulls versus the Bulls.
Well, technically, you can't buy a put because you're the guy who sells the puts to the buyer. So if you become the put buyer, you're losing your identity. You can't do that. Right?
I don't like to bet against my stocks like that.
Yeah. No.
I just don't. I mean, I just don't. I'll buy calls all day because it's a bullish proposition, right?
Yeah.
But dude, there's a lot of people. There's a lot of people that don't not buying puts. There's a lot of people that make a shitload of money when the right situation presents itself, the right risk reward situation presents itself. They can make a lot of money buying puts.
Well, there's a guy.
They can reposition themselves.
There's a guy on Wall Street Bets who bought 1,400 puts on Nvidia expiring next week. His strike is 120. He's down 250 grand because obviously Nvidia's at 130. But if Nvidia tanks to 100, he's gonna make like a couple $1 million, dude. So
yeah,
that's
crazy
how it plays out.
So anyway, guys, I'm gonna go ahead and roll this to January. That way I don't have to jack with it because I can't get any clarity from Robinhood. And this is another thing. Like, you're obviously in there with Vlad. I don't want to put any pressure on you, but I'm just saying this is something that they really have to remedy because it's going to cost them a lot of potential traders.
I agree.
Because it's just not a good look, dude. Bottom line, it's just not a good look.
Hopefully on that new trading platform, they have some clarity on
So I'm just trying to go from 7 to 9 and I'm trying to break even. Hell, I was willing to pay, But now it's like, what can I do for break even? I don't know. So I'm just putting it out there into ether, see what happens.
But you put a limit price of 0.00.
Yeah. Well, because I just paying the regulatory fees.
But like you can do that? You can do that without paying?
Yeah.
Oh, wow. Okay. I don't know.
So we'll see what happens. You know, if not, I'll go in there and I'll put, and dude, I mean, that's the bid. So at the bid. So I've actually had this done filled before, and you just pay the regulatory fees. I think it's like $30 in this case for me, and we'll kind of go from there.
Okay, so now I want to do some new tickers. Let's look at a couple stocks, and I just want to see the premiums. We don't have to make decisions, but I want to see the premiums. Can we look at Rocket Lab and see if there's any premiums at all that are enticing given the stock is run? Because I'm sure people are buying puts now because they're scared. It's up 30%. So maybe we could sell them some puts, and maybe there's something there that's exciting. And then I want to look at HIMS after that and see if there's any premiums there. Let me know any tickers in the chat, guys, that you think are a little bit more exciting. Nah, those premiums suck.
Yeah, so I just closed out a position on HIMS at 15 a minute.
Did you make money on it?
Oh yeah. Yeah. HIMS is good, dude. I like HIMS at 15. In fact, I love HIMS at 15.
You closed a put on it?
Yeah, I had 50. We hadn't talked about it on the last one, but on August, this is part of our deal. So August the 12th, I sold 50 of them, collected 2,500 at 15, and then I closed them out and I gave back 750. So whatever that is in profit on August the 21st. And I like it, dude. Hell, I'd be okay doing as many as 100 contracts at 15, 15, 50, 16. It's just it's easy money. They went down here recently a couple of times. And this is shout out to Data Driven.
Yeah. He does great DD on this. Yeah.
And he puts it out. Special shout out to Wong. You know Wong Invest or Technical Trader. He's changed his name a couple times. He brought this to me when it was like in the $7 range.
Yeah.
And I totally blew the kid off, bro. I totally blew him off. And
I mean, Adam was
talking on pill. That's what I told him on my channel. What a douche, right? I was like, isn't it just like a hard-on pill company or something? I'd rather own Teledyne, bro.
Well, okay. So first of all, I thought I wrote it off too. I thought it was a dick pill. I laughed at it. But I thought it was dick pills, and I made fun of it too. But as soon as they introduced GLP-1, everything changed. Everything changed.
Yeah. So it is now. I mean, they're proven to be, the real deal, dude.
Can we let's look at the premiums here. Let's look at 14. Again, I always go a little less aggressive than you at 15. That's why, guys, when I texted him, I was like, let's do Snowflake at 115.
Everything's like, making money, dude.
TJ was like, no, we got to do 118. I was like, this motherfucker's too aggressive. But every time I'm trying to save his money. He's trying to just like light it on fire and get the premium.
So here we go, dude. These premiums are, they're not great, but again, this company's making money, right? So that's the thing. When a company makes money, it stands to reason that the premiums aren't going to be as crazy. But yeah, did we do 15? What is that return wise? It's a 28-day trade, so about a month.
It's 2.6%. That's not horrible.
It's not horrible. It's 30%, 31%. It's right there on the threshold.
It's just if we jump into bed with this, I still have not done the most DD. I trust a lot of people that have done DD on HIMS, but I have personally not done it. So we just have to be.
Have you pulled it up on visual stocks recently?
Oh no, their numbers are good. I know their numbers are good. They're growing 50%. They're profitable. GLP-1 is a big market opening for them. They were going to get sued by the FTC. That thing is irrelevant. That was stupid. That's what tanked it originally at $19.
Yeah, I mean, dude, this thing, bro. I mean, just look at this thing.
No, their growth is amazing.
You know what I mean? It's like a hard on. This thing, it's up and to the right. I mean, it's what you're looking for. You know what I mean? It's what you're looking for. So I can't believe I just said that.
That's okay. I've said worse things with more people on. Don't worry.
No, but I'm saying, dude, I mean, this company is clicking on all cylinders, dude. But they are running into some headwinds with the government, right? I mean, is that or the regulatory bodies?
I don't know. I mean, there is, but I also don't know if it's a big. Is that FUD, guys, in the chat? Is that FUD, the HIMS lawsuit? Is that like a real thing or no?
So I will tell you one thing I don't like. and again, this might be the wrong company, but I think it's this company. I want to say that their CEO is like super like Elon Musk-y from a political perspective, but he doesn't have the same clout as Elon Musk.
Correct.
But he's got the same type of mouth, right?
But
And,
the thing is, so he ran his mouth about Israel and Palestine a couple of months ago, but
Mhm.
then he issued an apology. And I think Elon would never apologize. Elon has big dick energy. This guy, I'm pretty sure Vanguard and BlackRock called him up and said, hey, you better shut the fuck up. And so I think he's not going to be that much of an issue going forward. But he did have an issue a couple months ago. Yes.
So I'm just saying, like, that's one thing that has given me a little cause to pause, because it's one thing for Elon Musk to talk noise, because he's created a company unlike unlike no other, in my opinion.
Yeah.
But like, is this CEO like the founder of him? Like, where is he at? Like, to be able to like talk that kind of shit. This is again where you don't do any DD. It's very hard to draw those conclusions.
Right. Robinhood's up 4%. CAVA's up 20%. Snowflake even is up about a third. S&P's up 1%, and then SoFi's up. TJ, I think today's not the worst day to sell puts, but it's not the best on HIMS if HIMS is up, because we're not getting the best premium.
Yeah,
that might be. Things just went super green, but everything just went super green, guys. So maybe we hold off on HIMS. Maybe we wait till we get a little bit more red and then we sell the put. But I agree. I think 50 contracts. I'm down for 5,000 shares of HIMS. I don't think that's too bad.
So we got this one filled.
Oh, perfect. Okay, so how much did we collect? We got
$5,400.
Okay, not bad. TSLL. We're in the we need Tesla to do well on 1010.
So that was an error, guys, because I could have gotten the 30 cents on the very initial, but I was greedy, and then it ended up costing dearly. Just full disclosure. Like, I fucked up. Like, I should have gotten 30. I knew that 30 was where we could catch the bid, so to speak. And I got greedy, and then here we go, right? Pigs get fed, hogs get slaughtered.
The day Robinhood starts allowing us to get interest on the cash, that's cash security.
Hey, my little storyline's catching on, right? I'm telling you, dude, that is the one lever that I was like, dude, if I can understood this shit a little bit more. Like, I wanted to text you, but obviously the interview wasn't live.
Yeah.
But I was like, bro, you ask him that, dude, and put him on the fucking spot, dude. All of this Charles Schwab money's going over here, like, right fucking now. Because they got to go buy a money fund and do all that to qualify for it. So it's not as easy as like, oh, you're going to get your cash secured put collateral. Like, there's a process to do it over.
Well, see, Fidelity lets you do that.
Yeah,
and that's
dude.
I was talking to someone who had a deal with Schwab, and she said if she had to put down, like if she did 100 at 15, instead of having to put down 1,500, she could put down like $15.
Yeah.
Because she has a deal with Schwab where they know she's good for it if she gets assigned. But she doesn't. It's like naked options, essentially. So maybe Robinhood allows naked options for the most professional traders soon, because that'll be big.
Yeah, I don't know, man. I think it's what happens is like Charles Schwab. It's a VX something fund. It's like 5 letters. They own that fund, right?
Right.
So there's just a lot of stuff, dude. But what I'm saying is all I'm saying. Because I don't know this shit the way that you guys do. I always say it all the time. I'm not a librarian. I know somebody puts calls, make a lot of money. But dude, there's some things that these companies can do that is so obvious to me that if they do that, dude, they totally legitimize themselves in that space. And I think that is why Robinhood is so compelling, because I'm really starting to see the levers that they have that they can pull eventually. And dude, and this thing can like really turn into a fucking monster, dude.
No, I agree. Dude, future trading.
Even considering international expansion, dude, at some point they could be the international brokers. You know what I'm saying? Like what's to stop them from being able to do this in other countries? I'm sure they're already looking into it. I feel like, aren't they doing it or trying to do it in the UK? What about Canada? Like, I mean, there's a lot of people that would fucking use them in Canada, I feel.
Yeah. And we are already using margin as collateral, right, TJ? But you're talking about, do you want to get 5% on that margin as well as collateral? Is that kind of your point?
No, they pay to you on. I'm not exactly sure how it works, guys. Y'all could clarify it, because I just recently closed. We just broke up with Charles Schwab because we had an issue with the LLC, the way that it was set up. Because I don't have Series 7 license, so they wouldn't let me trade the family's money there. So we kind of gave them a big fuck you and took the money elsewhere.
Right.
So I don't know how that works, but no, you can't get paid money on margin. It's not your money.
Yeah. So, but so technically, we are, because you use margin as collateral. So technically, is that?
So let's look at it, guys. Let's look at it that way. That way, we're not guessing. We can look at hard numbers.
But what I was going to say is that kind of looks like a naked put to an extent, because it's not our money; it's Robinhood's money.
Yeah, but they're loaning that money against all of this.
Ah, right.
So no, dude, Robinhood is going to get their money, bro. That's the reality. So here's the issue. There's 1.488 million in cash that is not collecting that boost or whatever the hell y'all call it. The
5% APY. The APY.
Yeah, it's not getting that money. On these other platforms, that 1.488 would be drawing that money as long as I had set it up the right way with Fidelity or with, I don't know that you even have to do anything on Fidelity, but on Charles Schwab, you have to be part of this money market fund. Bill White could speak more to it on that, because I never got to that point with Charles Schwab. It was an absolute nightmare. I don't want to talk shit about Chuck, because I don't want them to sue me. But I mean, dude, it was just not a good experience for us, but it's totally worked. There's a gentleman that's friend of our channel and yours too, I'm sure, Mr. Premium of the option.
Yep.
He trades on Charles Schwab, and it worked perfectly fine for him. That wasn't the issue with us. The issue was the way the LLC was set up, and I needed to have permission to trade that LLC, and they wouldn't allow me to do it.
So essentially, Robinhood's giving you margin. You're able to use that margin as collateral. I do that as well. But the money that we have that Robin has given us the margin against, that's collecting nothing in terms of APY. And we can't really spend all that money because we need the money to be able to qualify for the margin. So that's the benefit that Fidelity gives you. They actually give you an APY on the margin itself.
Yeah. So there's that. So that is what we're talking about. We're talking about not being able to draw any money here. So it'll say here, your money drawing interest, right? Your cash earning interest, I have 0. Yeah. And another brokerage, it would say 1.488 earning interest.
Yeah.
That's the big difference, right? It's huge. And you can see how much, and on this kind of money, I'm just saying, dude, on this kind of money, that's a lot. It's a lot.
TJ, can we look at one stock that's very risky? And I don't recommend this, but Matt Money, our friend, recommended in the chat. Can we look at put premiums on MicroStrategy?
Yeah, I just recently had 10 shares because it split, and then I did that whole deal, and I just have so much exposure to Bitcoin already.
Yeah, that's why I don't know if it makes sense for your portfolio.
I mean, this thing swings $100 on any day, bro. It's just fucking, it's crazy. But it may be like they're essentially diluting the shit out of shareholders by issuing shares and buying Bitcoin with it. If you like that as a strategy, I mean, it's not a micro strategy. That's a macro strategy. You know what I'm saying? I'm just saying, like, this might end up being the most profitable Ponzi scheme of all time. I don't know.
Dude, Saylor might legit end up being the richest man in the universe.
Trillionaire. I think he could legit be a trillionaire if this shit goes the way this, because he's a very convincing individual. Like, dude, you want to get bullish on Bitcoin, go listen to this guy talk for 30 minutes.
Oh, he'll get you down a rabbit hole so deep. And that's also because he has the credibility, dude. He bet on big tech in 2010 when no one thought big tech would be big tech, and he made a lot of money on it, So he understands a lot about business in general.
Yeah, no, I agree. Dude, the premiums are great though.
So let's see. What
let me first of all, let me look to see where I did it, because I think I lost like $1,000. I just want to make sure that I'm not in no, I lost more than that. Yeah, so I lost like $4,000. I just want to make sure that it's been so I can't do it because this is a color wash sale. Like, if I do anything before September the 5th, I lose this little $5,000 tax break that I'm gonna get.
Right. And I'm assuming you sell on August 5th because you were clearing up some capital because that was Volmageddon.
Well, because that was going to be my 13th stock, so I wanted to get to 12.
Got you.
I just didn't want to have 13 on the books. That's literally what it was, because I was cool with it, because I was like, I'll make that money up. This was right before the split. That's why I had about 10 shares.
Right.
Because it was a 10-to-1 split, so I was going to be able to start wheeling it, right? And I was like, well, I'll get that money back to this MicroStrategy, and I'm pretty sure that it would have worked out if you look at where it is right now, because that's the equivalent of what, 129.
Yeah.
And
Yep.
it's at 140. So I mean, I would have already been halfway home.
Yeah.
But I can't do anything right this second because I don't want to lose this little $5,000.
Okay.
That's
Let's
going to go against the capital gains.
let's look at the premiums, but we won't execute on any of them.
Yeah, I'm
So if
pretty
we
sure.
wanted to do like 120, 110-ish, probably
So let's go a
115.
month out. That way we can see the math.
Wow, those premiums are crazy.
That's a 30 delta, dude. 645 on 13 grand. Is that really that high though?
Yeah, I think BidX is actually better. Hold on, 645 divided by 13 grand. That is yeah, it's 5%. It's not well.
That's
not
good. I mean, it's huge. But I'm just saying
that is good.
I have this one that I do a lot that I'm real comfortable with.
Yeah, this is the one you like a lot, Riot. Yeah.
Yeah, and I have 200 puts at 9, and I've got these. I just recently closed out some puts on at 750. Like this thing's just made me over $1 million, dude. Like Riot is crazy.
Someone said, "Is TJ managing Bits money?" No, TJ, this is his own money, but he's letting me give some input on his money.
Yeah, so we're right here on August the 7th. I sold 200 puts on Riot at 750 and got 9,000. And then a couple of days ago, I closed it out for 2,600. So I locked in the win there. And that's at 750. So I mean, it pays crazy premiums, dude.
Right.
It pays crazy premiums. I just want to pull this up real quickly because I feel like there might be a trade here because it's Riot kind of starting to trend down a little bit. And I like that 750 strike for a month out. Sorry, I'm taking out of work today. I don't like to do this on the channel. Yeah, but dude, I like this over. This is crazy. So what is that math-wise, Amit?
So we're looking at 37 cents on 750. That's a 5% premium. That's really good.
Yeah, and then I'm just more comfortable. It's not that I'm more comfortable with this one over like a micro. It's just that I'm just more familiar with it, if that makes sense.
Yeah.
So throw it out there, see what happens. Anything else? Anybody else have anything in the chat that you've seen?
Any other tickers I'm looking at? Let me see. We don't like Disney. I don't think TJ or I like Disney at all. We like Alibaba, but we can't buy that shit because it's too scary in China.
I can, but that's the one stock that I don't know why I keep looking at it. I used to own it, dude, and I already got away with it. I made money. And I keep looking at it, dude, and that scares me about myself. It's like I know I shouldn't do it, but I do it.
What about
so guys, the SoFi, the roll for SoFi is right here now.
Wow, we got away with paying nothing. That's not bad.
So you'll see it right here. I rolled it for $0 and I just added more time to the clock and I increased the strike price. So now we're officially at this point not leaving any money on the table. So I take that stress off the table and now I can wait for that call from your boy Vlad.
Right. Hopefully one day.
Be like, yo, what up, dude? Like, oh, and then it looks like Riot just got filled. So it looks like Riot just got filled. So, dude, you're making money on this stream. So, yeah, so it looks like it just tied up whatever that is, $750 times 200, and picked up a cool $7,600.
Right.
For agreeing to buy Riot at 750. And does anybody want to make a friendly wager? I could let this one just expire either in the money or out of the money. I got $100 that says it expires out of the money.
That was for today. You filled it?
I sold it today for a month from now.
For a month from now. No, I think you'll be. I think Bitcoin's going to be up in a month, and I think you'll be good on this one.
But I'm also okay with just owning the shares, though. That's the big difference. Because have you seen this Riot position, dude?
Yeah, no, it's a big one for you. I know it's a big one.
There's 70,000 shares. I'm down on the shares, but dude, this thing's a printing press, even on the covered calls. Dude, I've got these for sale at $10 for $9.13. I just sold them a couple of days ago on $8.20. And look at all the premiums that this thing paid 3,000, 3,000, 3,000, 1,500. So 10,500 on, it's about a 3-week trade on a
$80,000 position.
No, on about a $650,000 house. That's the way I look at it, right? So I'm like, pay about $630,000, $640,000 for the house, and it's bringing in $10,500 in rent for 3 weeks. It's not bad, and you're agreeing to sell them at 10. Right? You bought them at 907. You're agreeing to sell them at 10, and then I've got obviously these puts in the distance now, but.
Dude, I love this so much more than real estate, because if you get a multifamily tenant property and you rent it out versus just getting rent on your shares, you've got to be right on the stock. But besides that part, which is the biggest part, it is like an order of magnitude easier than getting a fucking property and renting it out and dealing with someone clogging the toilet. Like, it's just so much easier, bro.
Yeah, I have a podcast and I'm doing with 4 people in real estate, and it's going to be me convincing them why wheeling stocks is easier than doing rental properties.
Yeah.
Because I can fix a trade a lot faster than I can fix an air conditioning.
100%. I agree.
It's a reality for me, right? But don't get me wrong. I mean, a lot of people have made a shitload of money on real estate. So
100%. 100%. Yeah, real estate, it's not bad. It's not a bad strategy at all. It's just a question of who's willing to put in the work. Are you willing to have a property manager? Are you willing to go through all the regulations? And are you in that much control?
But you're able to buy real estate on credit, where here you have to pay cash for the stocks, and the tax incentives for owning real estate are way more favorable than they are in the stock market.
Correct.
So there's, again, dude, I don't want to talk shit about real estate, because I got a lot of buddies that got a lot more money than me, and they're not in the stock market; they're in the real estate market. So there's a shitload of money there. I like, there's a comment says do both. I'm involved in a big real estate project right now because people need a place to live.
Yeah.
People need a place to live. But again, you have to have a team. Whereas here, you could be a one-man gang and kind of do this thing. I can't do that in real estate. I'm not a carpenter. I'm not an electrician. I'm not any of that stuff.
Right.
And I don't have a Rolodex with those people. So I have to rely on like my buddy Chris to put all that shit together.
Yeah, and I think with real estate as well, although you can buy on credit, you do need some upfront capital. I mean, I think you would need at least $100,000 to get started.
You need 3 C's for real estate, guys. You need 3 C's for real estate. You need credit, you need connections, and you need some cash. And it also helps to have, conviction. Look at in real estate, because I mean, if you look at like these $1 million listing shows, I know a lot of it's all exaggerated potentially for the ratings, but there's a lot of people who lose their ass too. Like, in the market turns on real estate too, in these bigger cities that have those fluctuations. Whereas like we're dealing with like San Antonio, Texas, where if you literally look at their chart, like it literally is up and to the right, but pretty steady, minus the COVID spike, because that's the only time that San Antonio's had like that kind of crazy capital appreciation on houses. But for the most part, it gives you that, 2 or 3% a year or whatever it is.
Yeah.
And it's good, dude. And the tax incentives, dude, I cannot overstate them. They're enormous, dude. And then you can depreciate these assets. Dude, there's like a lot of creative financing that you can do, especially with taxes when it comes to real estate. And that's why there's a lot of people, like the Grant Cardones of the world, that push that asset class on you.
Right.
Because it does have some advantages.
Let me ask you one last question, TJ, and then I think we'll wrap up for today. By the way, guys, TJ's Twitter, I'm putting in the chat. TJ, well, let me ask you 2 questions. How are you growing on Twitter? What are you doing? Why do you think people are
my wife, bro, big feet.
Maybe that's it.
I was trying to get 8,000. This is the first time I'm like legit looking for a goal. I think I was kind of close to 8,000, but I think it might have fizzled out.
Yeah, you're like 30 followers away. So this is TJ's Twitter in the channel. I'll put his YouTube as well. So someone asked the question, do you ever spread out the strikes on your puts? So let's say you were selling $100,000 of puts on Robinhood. Is it a nice strategy to do 16 puts and 17 puts and 18 and 19 and 20, or just like all of them in one strike?
No, which is exactly what I did on Riot and SoFi. If you look at on Riot, I've got now the 750 puts, but before that I had the $9 puts.
Right.
I've got the $9 puts for $830, and then I've got now the 750 puts, 200 contracts of each, different days. You could do it for the same day as well, and which is what I have with SoFi, right? Like I've got I call them my backstop trades, but leap puts, and I've got them for the same expiration date, January of 2025, and I've got them at I've got 1,000 of them at 8 and 1,000 of them at 7.
So you think it's a good strategy to spread out the strikes?
Yeah, because I feel like if you know that most likely they're both going to win, but let's just say you get caught with the other one, the reason that I like to do it is because I could wait it out more, like on that $8 one, like especially if it's at like $7.90. Like I'm not gonna roll that $8 one prematurely because I'm like, I'll just leave the 7 one on and collect all of that premium, and it's lowering my adjusted cost basis anyway. So it allows me to be more patient.
Right. Right.
Because I'm like, I'm going to put on the winning trade and then I'm going to put on my risky trade, right? Like if I didn't have the 7, I'd probably just be loaded up at 1,500 puts at 8. But I was like, let me be a little bit more responsible because SoFi does carry quite a bit of risk with it. And there we are. So yeah, it's good. They call it like a ladder approach or something. I don't know the actual technical terms, but
now let's say SoFi 6 at in January. You have an obligation to buy 200,000 shares. Do you actually think you're going to buy those 200,000, or there's no way you're going to?
No, I'll roll the 8s to like 7 a year from now, and I'd definitely take ownership of the ones at 7. Just sell a couple calls at 7 or 650 and work it that way. But then at that point, I would just be planning my exit because I feel like, well, Anthony Noto's not going to hit his bonuses,
right?
And neither am I. Right. So I'm just saying, like at that point, I got to look at divesting a big portion of the position because SoFi has to really show something. I think we lost the mid guys.
There we go. I'm here.
So yeah, man, it's one of those things. I hope y'all enjoyed the episode. I feel like we actually showed quite a bit today.
I think we did a lot. Everyone, please make sure you are following TJ on YouTube and Twitter. He breaks it down. There's not a lot of people that show off 6.5 million with full transparency.
I don't know if you can see it. I got stuff hung up today, but can you read there in the back?
It's a great day to make money.
That's my quote of the day.
I love it.
It's a great day to make money. I got stuff hung up here, dude. We're like legit now.
Oh yeah,
I got a badass recliner coming in. I got plants coming in. Got a little table coming in to get shit off the floor. The little office is starting to look live, dude, because we're launching. It'll be Q1 of 2026, but dude, I'll be fully licensed and managing over $100 million, bro. So life's going up and to the right for me.
And you were driving Uber 5 years ago, which is just inspiring.
In 2020, I was driving Uber. I just quit the oil field because of a personal issue. Because my daughter passed, so I was like kind of like gathering my thoughts or whatever. So, dude, just if life takes a turn for the worse, just remember there's blue skies and green stocks ahead. You just got to keep your head.
And that's the reason I love this segment every week, because this to me is realistic. There's a lot of stuff on YouTube that's like get rich quick. This is like, hey, here's a approach where you can make 1 or 2% on your money, which is not the most, but it's way better than a lot of other places. And you don't need the most capital in the world to get started. And there's a process that you're teaching us how to do. So
yeah. Anyway, guys, I got to get run. You want to do the little thing, dude? Because I learned the word. I'm always trying to get a little smarter because I need a lot of help in that department.
Yes. So let's do word of the day. And then we'll be done here. Thank you, everybody, for being here today as well. Please make sure to check out TJ's YouTube and Twitter. It'll be in the chat. Word of the day is maelstrom, a restless, disordered, or tumultuous state of affairs. Well, JPOW,
disordered, tumultuous state of affairs. So my relationship with Neo is maelstrom.
JPOW did not have a maelstrom relationship with the market today. He said what we wanted to hear. So there we go.
Dude, Amit, keep up the good work, brother. Are you joining us on Finance Junkies this weekend?
No, they're not this weekend. So I have a couple meetings this weekend. I have to go somewhere, but probably in the next couple weeks, I'll be back on.
Awesome. Well, keep up the great work, bro. Appreciate you. All the love. I hope that everything keeps going up and to the right. I mean, you're on an amazing trajectory. We've only connected for a couple of years now, but dude, where you're at now in comparison to when we first met, when you were, looking like a fucking terrorist over there. I mean, dude, you're on a fucking trajectory, bro, that there's a lot of people like legit in the chat and people that like met you live in Vegas. They're going to be like, dude, I know that guy. Like that's the trajectory that you're on, where people are going to, even if they don't know you, they're going to claim to know you. You know what I'm saying? So I don't know if that's something that you're really after or not, like that kind of clout, but that's kind of where you're going in life. And I just want to make sure that your head's on straight, because who knows what that shit's going to look like when a lot of people start recognizing you.
Well, that's why I got people like you, Chris, Steve around, it keeps me grounded. And yeah, it means a lot.
Just don't ever turn into a dick, bro. That's the only advice I would give you, because in a world where you can be a lot of things, it's pretty easy to be nice.
Yeah.
It didn't really take a lot of effort to just be nice.
Yeah, and we've seen it with, various YouTubers that you and I both know, that the clout gets to them. They get a little bit of attention, they get some followers, and then, they start thinking that they're God. They get a God complex, and that's the worst thing you can get in this industry.
Yeah. That's the thing that keeps me humble in the market is, boy, dude, things are rocking and rolling. And then all of a sudden, I looked at my wheel tracker the other day and I had over $3 million of cash secured puts in the money. And I was like, okay, let's pump the brakes and manage these positions. And now, for the most part, I'm out of that jam. But this is on that manic Monday, right? When shit went south.
Yeah.
It's just, the market will humble you real quick.
100%.
I got to rock and roll, man. I appreciate each and every one of you guys, man. Thanks for all the comments. I didn't really get a chance to follow today, but I try to watch this afterwards. That way I can learn from you guys. If there's things that I'm doing you don't appreciate, I always try to get better for the next one.
All right, TJ. Thank you so much. His links will be in the description, guys. We'll be back next week.
Appreciate you, brother. Have a good one.
Bye, TJ.
Bye-bye.
All right. Ty says that can't happen to him. He already started with the God complex. Yeah, but that complex is more it's in a way, it's a humble kind of, it's like knowing you're not a God complex, but acting like you have a God complex, which just makes it funny. There's actual people that legit think, that they're the next coming of stock Jesus or whatever. And it's just like, that stuff gets a little bit too aggressive. And I think that comes from being way too bullish or way too bearish and not being objective. And the one thing I want to do on the show every single day is try to see both sides. I'll have some emotion, like today when JPOW gives us what we want, when Robinhood is up almost 5%, I'll have my bullish emotions. But we always got to keep it in check and try to get both perspectives. All right, so AMD at 153, CAVA at 124. Indices are selling off a little bit right now. S&P at 558. IWM was doing really good just a couple minutes ago, but now let me see where it's at. It was up almost 3%. Now it is. TNA is still up 8%. IWM is up 2.8%. Still good. Still not bad. It was up 3%, still up 2.8%. I mean, give me 2.8, give me 2%, even give me 1.75% on IWM. It's been a long time since we saw IWM back at 219. QQQ up about a third. Really, the small caps are outperforming the S&P and the NASDAQ today, which makes sense. That should be happening. Just given the fact that rate cuts help small caps more. Robinhood's outperforming the market right now. That's good because rate cuts will help Robinhood. Uber's at 73. Uber at finally went green. Bitcoin still holding 61. That's good. Rocket Lab up 1.6. Palantir's red today. Not sure why. I think it's because in general tech is selling off. And I think tech is selling off because rate cuts are not bearish for tech, but they're way bullish for small caps. And so market's just kind of rotating here. But again, when I say selling off on Palantir and I'm still looking at a 3 handle, I just feel disgusted every time I say that because it's the epitome of greed. So, until we see Palantir below 30, I don't know if it's really selling off, but it is down on the day. SoFi at 744. SoFi got rejected at 758. Hopefully by the rest of the day can get there. SoFi should get to $8 before this rate cut. This rate cut is super bullish for SoFi. So it would be surprising if we don't touch 8 before that. But SoFi getting some momentum today. And the rest of the market holding up. Although we're seeing a little bit of sell-off in the indices, the rest of the market is not necessarily going bad. There you go. IWM almost right back to 3%, 2.94. Maybe that one ends the day green. Mag 7 is NVIDIA's green 3%, Tesla's green 3%, Amazon's down, Google's up, Meta's down, Microsoft's down, and Apple's down. Someone said Meta is canceling their thing, their Reality Labs thing. Is that true? Because that is actually very bullish in my opinion. Because yeah, Meta has reportedly canceled plans for a premium mixed reality headset intended to compete with Apple's Vision Pro. Meta told employees of the company's Reality Labs division to stop work on the device this week after a product review meeting attended by Mark Zuckerberg left other executives against it. Okay, so basically Zuck's had a meeting with his head product managers. He saw the product. He was like, all right, we're not going to beat Apple. And Apple's Vision Pro is not even really selling that much because there's not a big use case for it. So they're not pursuing that. I think that's super bullish for Meta. They should go all in on AI. They don't have to worry about the Vision Pro headset competitor. So I think that's good for them. That makes sense. Meta is down slightly on the news. And then IWM right here. Look at that. 220. 3% on the day on IWM. I love it. 3% on IWM. Why is Faraday Future crashing? Well, we know why it's crashing. That's not complicated. But how much is it crashing? Faraday, it was up 150%. It's down 13. Well, down 13% isn't that crazy, dude. It was up 150 the past 2 days. That is a meme stock. Please just remember that is a meme stock, and it's getting some momentum, but it is meme-ish. Robinhood at 2080. What's the resistance to 21? 21 has 10,000 shares. If we get the volume, we really don't have too much resistance leading up to it. So let's see if Robinhood can keep outperforming. We can close above 21 would be super bullish. Even a 2075 close on Robinhood would be super bullish. So let's see if we can get that as well. Carnival Cruise up 5%. Yup, the cruise lines are doing good. Overall, relatively green day, but IWM, the major outperformer right here at 220, up 3% right now on the day. All right, that is it for me, folks. We will be back 3:45. I think we'll have Steve on today. I'm pretty sure. So we'll get to talk to Steve and get his thoughts and ideas on stuff that's going on. Matt just says I opened a 200 share position on NVIDIA. All right, so even Matt. Everyone spam FOMO Matt in the chat. Everyone spam FOMO Matt. That is absolutely a FOMO by Matt. But he is sipping the Kool-Aid, and he thinks NVIDIA is going to go green. So Matt's on the NVIDIA train. Yeah, we'll have Palantir Weekly tonight. I think Arnie will not be on tonight, but we'll still do 11 p.m. with me, Matt, Amir, and Vince, most likely. Maybe a couple other guests, but Arnie can't make it tonight, so it'll be just the rest of us. And then Market Close. We'll be there later today at 3:45. That is such a FOMO by Matt, dude. He's like, you know what? Fuck it. NVIDIA, let's just buy 200 shares. What'd you pay? 127 or 128 times 200? So Matt dropped 25 grand on some NVIDIA shares. All right. Not bad. Guys, I want some waffles. That dream, I think I'm going to have to get some waffles, bro. That dream is, it's like, I'm like foaming at the mouth for these waffles. So if I get some waffles, I'll let you guys know at the market close, but I think we need to find a place that sells waffles because I don't know how it got into my dream, but now I'm asking myself why I don't have waffles. So market's green. I think we can afford some waffles. Portfolio's looking okay. Maybe we get some $15 waffles and we keep things moving. All right. That's it for me. Thank you, everybody. 3:45. Who dreams of waffles? Dude, I've dreamt of crazier things. So the fact that it was only waffles makes me like calm because my dreams are ridiculous. Sell covered calls on the waffles. Yes, we should do that. All right. Thank you, everybody. 3:45. We'll be back. And Steve likely will be on the market close. And we'll keep going from there. Bye, everyone. Have a good one. I'll see you guys at 3:45 later today.